with being proactive about sharing and disclosing your growth, your challenges, your pivots, if at all. That, so it's rather than you being chased by your investor, it's always good to be proactive and share all these key matrices with the investor, because you like it or not, but the next round, his or her role is going to be very critical. Even if they don't co-invest, even if they don't, but their recommendations, their network will definitely help you. Valuations, at early stage, idea stage, work a little differently across different geographies. So they're a little different in India than they are in the US. And what JP was trying to say is, irrespective of what method you think is right, whether it's TCF, whether it's what's happening otherwise on the ecosystem, what's unique in what you're doing, et cetera, you really have to have logical reasoning why you think your valuation should be what you think it is. It's not about you being right or wrong. It's not about what the investors agree, what you agree on eventually, and what works, or whether you agree to a lower valuation, take a smaller round now, wait for 6 months, scale up and show month-on-month growth, and then raise the next round, or break it into 2 tranches. It's whatever the case may be, but you really need to have logical reasoning behind valuations. Valuations are just not numbers that can be picked based upon the projections that you've given for the next 3-5 years, or whatever you feel should be the right valuation. And that's why, going back to JP's earlier point on having the right advisors and mentors on your board that you can have, who are neutral, who are not investing, who don't have equity, who are not exiting, they are the people who could probably tell you what the right valuation is. So that group of people that you can reach out to is very, very critical. And asking them not just what the valuation is, but why and why not is very critical, because that will help you when you are pitching and when you're negotiating with the actual person who's going to invest in you. It's very, very critical that you know what you're talking about, and there's some logic, some strength in the reasons that you give for whatever it may be, whether the valuation is higher, lower, or your fund requirement, whatever the case may be.
Perfect. All right, so let's jump into it. So track record and opportunity. So building a story around the team is very critical, especially from the trust factor. So when it comes to trust and building a relationship with your investor, it's going to be done in a variety of ways. I was talking to an entrepreneur earlier this week for lunch, and she was asking, I don't do a lot of these activities that investors do. What I said to her is, neither did I. I had to figure out how to build a relationship with investors where they are. So yes, there's going to be, the TiE Atlanta Angel Group, or your local group, angel groups, or friends and family. But typically, the beginning investors are going to be looking at their relationship to you more than their sophistication around the company. They ideally want to see that you either know how to run a business, and if you don't know how to run a business, are you attracting a board of advisors that has that experience like we talked about before? You should definitely use a TiE ecosystem to find mentors to help you with that process very easily. I literally cannot count how many thousands of entrepreneurs in our community of TiE that have already gone through your journey that you're just about to start. So there's really no excuse to email the heads of the TiE University program to get you connected to a mentor. Actually, a couple of the students who had presented the last time that I was helping out actually reached out to me. We've had multiple sessions with them. I've probably met with them a half a dozen times to kind of walk them through. I have entrepreneurs that constantly are coming to me asking, from my perspective, having gone through the process, I join a lot of these boards and become advisors to a lot of these companies. And the things that advisors are looking for are you very serious about what you're doing? Now, that sounds very obvious, but because you're in school or in college, there's a big question mark on how serious you are to build this business. But it's a catch-22 in the sense that you may say, well, in order for me to quit everything and focus on this company, I need to raise capital. But the capital is saying, the only way I'm going to invest in you is if you quit what you're doing and focus 100% on this business. And if you have parents, they probably say, just stay in school and get a job. So it really depends on what your ecosystem is. Having started companies on my own while I was in college, really, it was very hard to raise capital. So most of the businesses that I built were service sector based, that I could get up running, generate revenue without raising capital. And we did extremely, extremely well with an international distribution company in the late 90s in the DVD industry. But I didn't need that much capital. And a part of it was because I had a difficult time raising capital. So they do want to know how serious you are about your experience. Javier, any thoughts on if one of the students are very serious about building this company and the risk factor of them being in college and maybe quitting versus pursuing it as an investor? How would you look at it, and any advice on there?
So I really am not in the favor of quitting your education and starting on something that is still an idea. I think unless you're very, very secure, unless you have a good proof of concept, unless you have a good team of people working with you who are dedicated as much as you are, and you are the right team to deliver what you're trying to deliver, I would not take that extreme step. I could take a sabbatical. I could take a break. I could focus on one or the other, or I would do both at the same time. Quite honestly, I mean, it's not only that starting an idea from scratch is a challenge on your mentally, peer pressure, college education, degree, career, financials also play a very, very critical role. Unless you are pretty strong and secure in more than one ways, I would not do that. Or unless you have nothing to lose, if you were to take a 1-year break and try this idea and go back to education, I would be skeptical and not quit and start doing it unless I was very sure of the idea and the idea was proven beyond doubt, in my opinion.
Yeah, as a follow-on, having built those companies, it wasn't, I remember it was I was actually in my third degree. I was literally so I went to Georgia Tech here in Atlanta, and I had a full ride. I was actually netting out positive cash flow from my scholarships, and I actually used those scholarships to try to get some of my ideas off the ground. But it was in my third degree, because I kept on going to school trying to start companies because I never wanted to get a job. I just wanted to start a company, that I finally was able to get my business up running, generating revenue, and took it seriously, and then quit college to go and build the company. Thankfully, it ended up being a success. But that right before that, there was 4 other companies I started that were failures. So I think that it is good advice, because the college ecosystem also gives you a great advantage of building relationships. Nowadays, almost all the big universities have an entrepreneurship program. They have incubators, they have business accelerators, and you want to build relationships with your classmates who you'll probably end up doing business with in the future. I know even today, I actually had one of my students from 18 years ago, 16 years ago when I started lecturing, that is actually my head of analytics and underwriting today in my company. He helped me in one of my other companies. He went on, managed tens of billions in the pharmaceutical world, built artificial intelligence systems, and then fast forward, he now moved back and he's working for my company now. So that ecosystem is always going to be there, but you want to take advantage of where it is that you are and all that connectivity. So one of the first slides that I usually have for any presentation about my company has to do with the team, their track record, what they've achieved in the past, and I can borrow from their expertise, borrow from their milestones to tell that story, to give a level of comfort. So for example, in one of my companies right now, Leap Credit, we talk about one of my business partners built the largest consumer lending in my space. They went from 0 to 100 million EBITDA before the last crash, got it to 400 million EBITDA after the crash, sold it in 2013 when they were doing 600 million EBITDA. It was a multi-billion-dollar exit. My other business partner was one of the first employees at another startup, grew it to $500 million in revenue, and then IPO'd that company for $5 billion on the New York Stock Exchange. So I didn't have that expertise. I know what my strengths are. I'm good at communicating, finding people, telling stories, and then attracting talent. And you've got to know what your strengths are from that process. And I'll tell you, the 16th time around, it becomes a lot easier. But I'll tell you, you've got to be able to go through that process as quickly as you can. Fail quickly, fail forward. That's one of those things that you hear in the marketplace. I will tell you, there's a problem with that as a dilemma, in the sense that a very strong entrepreneur is very tenacious, doesn't want to quit, is going to try to figure out how to solve the problem and get to the other end. On the flip side, you got to know when to quit. So when is it the time that the company's not working, it is failing, and you're holding on to it too long because it's your baby. So being able to differentiate the two really comes down to finding advisors and finding people that you can surround yourself, that you can trust, and gain guidance from there. Also in that slide early on, I also put in my board advisors or board members, their background and their expertise, so that other people, when they're looking at it, one, they can do due diligence. They can call one of the board members, especially if they're well-known, and say, hey, what do you think about this company? How are they running it? What's your involvement and stuff like that? And that gives also another level of confidence from there. Javier, any thoughts on that? Or
no, I totally agree. And sharing your vision, listening on to your advisors, giving them due respect in what their opinions are is very, very critical, because I've been wherever we've been advisors on, or wherever we've been earlier investors on, we get called upon by follow-on investors, and they ask very simple questions. And this is just a couple of days ago. Where do I see the company? I mean, it's an entertainment media company. So I said, this is right now in-person reality show kind of a company, but we can look at gaming. We can look at multiple other things that can happen with this company. So you have to really be aligned to the advisors and early investors, so that you're all talking the same language. And when they talk to prospective investors,
तेरे साथ कल अंटे मतलब तुझे करना है.
please.
Yeah, so basically it's very critical that you align yourself with your advisors or earlier investors. I totally agree with that.
Perfect. Okay, opportunity size. So we talked a little bit about it, and you really need to communicate, especially if VCs and angels want to know that you know your market better than they do, right? Most of the time, my investors are not experts at my industry. Now, some of the VC, if you're going to raise VC funding, they're going to be probably a better expert than you in most cases. And you're not going to be able to BS them around the stats of the industry and the growth and opportunity of the space. So you really need to make sure you know your numbers. And I think early stage analysis on your market is pretty critical, meaning like, is it growing? And a lot of that has to do with, have you done the research required about your industry? One of the things that I don't do as much anymore, but a lot of my team members do, is we subscribe to every email list in the industry. So we're getting daily reports in the industry, growth metrics, performance metrics, new laws, new regulatory structures. If you're not already in that ecosystem and you're not part of, the conferences, the big groups and associations within your space, you're going to have a hard time being able to be most up to date when the conversation comes out about the marketplace. Some of the things that I always look at, because I'm in a consumer lending space, highly regulated, I'm always looking at regulatory risk. I'm always looking at what the greater markets are doing, such that, is there, going to be higher unemployment during COVID? Is there going to be a big demand? We experienced both. There was phenomenal demand after COVID hit the US markets. We were able to expand exponentially. And on top of that, we had actually been talking about that prior to COVID even hitting. that a recession hitting the US marketplace would be to our advantage as more people would have an increased demand in lending. So you've got to know that conversation very fluently and know how big that market is. You got to do the due diligence. You see it on every single slide when you're presenting, which is how big is your market? And then your addressable market, your specific addressable market, or SAM, how big is that? And then what is your approach to being able to scale into that marketplace and capture it? And so there's the market opportunity, and then that connects with the market strategy of how you're going to be able to market the product or service and be able to capture that market space. And I think that you've got to be able to understand your differentiation between yourself and everybody else. One of the early number one questions that comes up from every investor is, why would I give you money if all these big guys are out there and they're already taking up such a big part of the market? So are you just another business that's doing the same thing, not differentiated? Because if you're not differentiated, you're not going to be able to get a great return for your investors. Now, on the flip side, in our marketplace, I had experts who had helped build. I had helped build business in this industry. So I kind of knew the marketplace. In fact, all of my competitors were former customers of mine, and I actually really understood what it was that they were doing. And my advisors, one of my first couple co-founders, including Paul, were all in the lending industry. And so that helped kind of validate what it was that we were trying to go after. Now, what our differentiator was, we were really good at technology and artificial intelligence, and our industry was very backwards, still very backwards years later. In fact, I don't think in the next 7 years that my industry is going to be able to catch up to what is, just traditional reinforcement learning algorithms, machine learning models that we know how to implement. So that was kind of our edge: automation, machine learning, and being able to introduce it with seasoned expertise, because we knew what we were talking about and we had that expertise. So those are kind of the two big things as far as understanding the opportunity. Mahavir, any thoughts or insights?
Yeah, so I just like to add to what you've said, and not wanting to repeat, and taking Puran's question that he's typed on this thing. I think the investors or advisors profile, if it helps the idea, if it helps the fundraise, if it validates you as a team or your idea by someone who has been a veteran or who is known, is always great. There's no harm in doing that. If it's a family or a friend or just an investor who's not very well known, or who's not a domain expert or investor, it doesn't really matter, because I would still want to do my own diligence, because I don't trust, many investors wouldn't trust someone that doesn't have a track record. Again, track record investors should be out there on your deck. That's one. Secondly, the market size, the opportunity. Two things I'd like to say. One, of course, is the fact that you should have some sort of a growth model where it should grow on its own, rather than cost of customer acquisition, or the fact that you need a lot of money to grow. It should be growing on itself, and that kind of a product or service and that kind of a market which is untapped does help. If there's a market that's crowded, if there's other people and your go-to-market strategy is different, or your way of approaching customers is different, or your price model is different, you really need to have slides and reasons and justifications on why your model or your idea would work. I mean, I've just recently invested in a fintech company last month, and it's not any different. There's so many fintech companies in India, from Google Pay to Phone Pay to Paytm and so on. But still, I invested in this company because it had a very unique go-to-market strategy. I mean, while everyone was doing UPIs and QR codes and debit cards and credit cards and payments and point of sale, this company was doing all of that also. But what this company was doing differently was, it was not going to consumers. It was not going to retailers and telling them, please have my UPI at your point of sale, or use my QR and use my bank. What this company was doing was, it was partnering banks, mainline Indian banks, to say that you're going to be losing your business and your retailer, which has loans from you or current accounts with you, to these people who are using this money, keeping the money for a day or two, and then putting it in the bank, and they're your future competition. So what this company did was digitally enabled all the small banks which were not digitally enabled to a UPI QR code, and they already have 100,000 retail customers without spending a single penny on acquiring them, and they're growing 30% month on month. So sometimes, even if it's a crowded market, your other products should really make sense, and it should work. The opportunity for a fintech market in India, digital payment markets in India, it's probably just on 5%. We have 100% market to grow, but who will be there, who will grow, who will acquire? So that's all very, very subjective. So you really have to show enough reason that you might be the 10th entrant in the race, but your marketing, your strategy, your cost of customer acquisition, your referral program, whatever the case may be, is much better than the others. And why others cannot do what you are doing because they have their other priorities or other challenges. So sometimes having in-depth knowledge of your subject, sometimes despite the opportunities being large, despite the competition being large, your other strategies, your advisors, your earlier investors, your month-on-month or week-on-week growth, all these matrices also do play an important role and do show the opportunity that you are trying to project vis-a-vis what I as an investor see, or someone else as a competition see. So it's very, very critical to have a fully in-depth but a holistic view, so that you can see direct competition and you can see indirect competitions. For me, Amazon was a marketplace selling products, but now they're into payments. They'll do everything. So for me, there was an indirect competition that did not exist a couple of years ago for fintech payments, but they do exist now. So it's a very, very simple thing that sometimes you don't see competition coming from unknown sources. And we as investors are wary of that. So you need to be really ready to deal with that situation also.
All right, moving on. Okay, performance and financials, depending on who you are, can be probably the most intimidating or the most exciting area of presenting to an investor. For me, it's typically the most fun. I love being able to tell stories with data. And I really think that's how you have to think about it. You can't think of it as this is one gigantic math problem, which it is, but you really need to think about it from a story standpoint. Somebody who doesn't really have context and building up the business from a number standpoint. Now, if you've got seasoned angel investors, they're going to be drilling you on these numbers, and you better know your numbers extremely well inside and out. So what do I mean by that? So let's start with unit economics. How do you make money? So it's 101. If you've got a widget and it costs X amount of dollars and you're going to charge Y, the difference between the two is going to be your gross profit margin. And you've got to be able to walk through that and break it down bottom to top, so that an investor clearly understands how you make money. If you cannot communicate that in a simple way, they're not going to be able to understand tangibly how you make money. Now, a lot of people talk about the industry. They talk about why the product is so great, why there's so much demand, and you're going to make all this money. But if you don't understand it from a unit economic standpoint and can't communicate that, there is no real tangibility behind what is it that you're trying to do. Mahavir talked about cost of acquisition or your CAC. Depending on your marketplace, you got to know that. That's a critical component in your acquisition cost. And then there's operational costs. So obviously in the beginning, you have a huge amount of overhead. You've got, could be people. Hopefully you don't have to have physical location, but if you've got widgets that you're creating, you might need manufacturing support or contract manufacturing, depending on what it is that you're trying to do. But you've got to be able to take all of that math and put it together. If you're a B2B type business, you might have a lot of B2B sales reps that you have to hire early on as you start scaling up. Now, most entrepreneurs in the early stage expect you to be the salesperson, or your business partner to be the salesperson, and they don't expect you to make any money or get a salary. It's just the reality of a startup or a seed round of funding. They expect you to be, if you need to be sleeping on the couch or using your own money, go do that. But they're not typically going to look to finance your pocket. They want you to finance purchasing of widgets, your marketing strategy, your sales strategy, and building out the business, but they don't want to put money into your pocket for a salary. Now, having been there, that ends up being the reality, where either you've got to get family and friends, you can sleep on somebody else's couch, you can, get roommates, whatever it is that you need to cut your expenses down to nothing. Early stage entrepreneurship expectation from investors is you are the one who's basically going to be running around. That being said, as you scale up, you need to have more true unit economics that have those expenses in, that have the people, the resources to actually break it down. So after unit economics, and you really give a thorough understanding of how you make money, they're going to want to figure out, okay, what are the things that drive your business? So KPIs and trends, to some degree, it's statistics, right? In the sense that you can paint whatever story that you want to paint. But if you're talking to somebody who's sophisticated and you try to BS your numbers and try to use metrics that are not standardized in the industry, they will call you out and they will make sure that they don't invest in your company. Because if you don't understand your metrics as well as they do, why in the world would they want to invest in your company? That being said, if you're early in the process, get board advisors who are in the industry to show you what those metrics are that are going to be fairly standard in your industry, so that when you communicate them, you have some sense of what reality is in the marketplace. For example, in our industry, in the lending industry, specifically for small dollar simple interest installment loans, number one KPI is what's called FPD, first payment default rate. So that's, I send a dollar out of all the customers that I get, what percentage of people don't pay the first payment? So that is like one of the most core metrics in my industry. If I don't know that metric, every investor, so we have an institutional investor, we had VCs, we had other sophisticated people in the space, that was actually one of their first questions. So one of the things that you're also trying to do with your numbers is preemptively answer the questions your investors are going to be asking. So you should have all that information. Now, the easiest way to do that, pitch and practice pitching. The more that you pitch, the more you're going to get these questions. The more you get these questions, the more you're going to be prepared for answering those industry specific. So Mahavir, before I go to the right side on financials and pro forma, any other takeaways on unit economics, KPIs, or any other metrics that we need to be communicating to our investors as we get going?
Well, I think you're absolutely right in what you said. I don't have much to add to what you said. I think numbers don't lie. I mean, when you're pitching, you do get overboard and excited, and you oversell your product or service that you've created, that you've fallen in love with. But unless you have these numbers to back them up with, unless you have these numbers in the back of your hand, we will catch you. We're after all investors. We're not your mentors at that point. We're trying to look into reasons why something would work and not work mathematically, and that's what we're looking at, numbers, and we go deep into all these things. So it's very, very critical that you understand them. Numbers don't lie. Numbers cannot exaggerate. And this, while you oversell your product and service or the IP that you might have, but still you run short of money, or your unit economics don't work, those two things don't corroborate. So you have to be really good and make sense why you are not making money despite being so good, or you are not as good, but you will be good after some, so your story has to be very realistic for it to match your verbal communications to the numbers that you're going to suggest. So it's a very, very important match, and only prudent advisors or mentors will help you reach a synergy which works both for numbers and the growth model that you're trying to project.
Yeah, another thing to add on is use vendors as benchmarks. So when you're getting started with a company, you don't have your own numbers, right? Because you just are getting the company started. So one thing that you can do, and I did even early on in this current company, is I talked to every single vendor and the vendors' competitors to get what are the benchmarks in the industry. Things like what should my cost of acquisition be? Typically, what's the repeat rate of our customers to figure out the lifetime value of these customers? So asking the vendors in the space, they have nothing else but every positive reason to give you that data, because the more business that you end up doing, the more they win, right? So they want to give you that information. The other thing is, from startup to mid stage, the story that you're telling is very different in the sense that you're talking about theory early on and ideas and how it's going to work, or how it should work. So you want to include a lot of industry data to kind of understand where the market's going for the investor. So you may not have internal metrics yet. You should use external metrics, like I said, from vendors, but also industry information to kind of tell what that story is and where you expect the market to go and why is it that you're going to be able to take advantage of it. Okay, the right side, financials and pro formas. Most entrepreneurs, early stage entrepreneurs that I know, are not good at these three statements. The P&L is what most of you probably know, profit and loss statement or income statement, where you get to see revenues here, COGS or whatever cost of goods sold, your expenses related to that revenue, and then your OPEX or your operating expenses. Now, if you have financing, that interest payment is going to be going in there and creates your EBITDA, or earnings before interest, tax, depreciation, and amortization. So it's almost pretty much all that I see most early stage entrepreneurs actually understand. But for a startup, the most important is the cash flow statement. Why? Because a P&L can be a projection of where the company is going, or from an accrual standpoint. You got to know the difference between cash versus accrual-based accounting. But the cash flow statement really shows us as an investor, is this company going to go bankrupt? Do they know how to manage the cash? And are they making it productive? And then the balance sheet really shows about how much capital that you've got, how much capital you've raised, what's the expectations from a forward basis. So one of the things that I do whenever I look at and screen companies for TiE Angels is I look at the balance sheet. How much cash do they have on hand? What's their burn rate from the cash flow statement? And then connect the cash flow burn rate with expected growth with how much cash is left in the bank account to figure out how long it's going to be before they go bankrupt. Unfortunately, my goal when I screen deals for TiE Angels is not to tell you all the reasons why it's going to be successful. It's to screen out companies that I think that in the next 3 to 6, 8, 9 months might go bankrupt because they just don't have enough cash to survive, even if they do have a great idea. So that's where the relationship of having very lean operations relative to how much cash is in the bank and being able to actually bridge that gap is going to be critical in the financial statements. Now, there's probably 1,000 YouTube videos on how to do a P&L, understand the cash flow statement and balance sheet. But the quickest thing that I can tell you is the balance sheet is a snapshot in time versus the P&L and cash flow is cash through time, and understanding the relationship between the two. So I would say that, this is you got to get a crash course on MBA of P&L, cash flow, and balance sheet. There really is no excuse anymore. I'd say maybe pre-internet, pre-1994, you might have an excuse, but even then you've got plenty of accounting books out there. It's one area that I see that creative entrepreneurs do a very poor job of understanding the financials, and they keep saying, well, somebody else is going to take care of it. I can tell you from experience, you don't watch your own financials, I guarantee you're going to run the company in the ground in the early stage, because if you don't understand the relationship between the two and how that's going to connect from an investor's perspective, they're just going to really say that you're just not ready to take on capital. You need to go through that. Now, as an entrepreneur, I've been through this process several times, right? The number one thing is not me. I'm not thinking daily about my financial statement. I'm thinking about how can I sell my product? How do I build my widget? How do I just get this idea off the ground? But I can tell you, if you're going to raise capital from somebody who's going to write you a $10, $50, $100,000 check, they want to know that you know what you're talking about from the financial statements. Mahavir, any thoughts to add in there?
No, pretty much. No, pretty much. You're right. I think those are very, very critical. I think you, even if you're not good at it, you should have a handle on it. There's no excuse that you are a technology person, or both the co-founders are, or all three are. It's very important for you to see the numbers, because that's where your future growth and it is dependent. So I totally agree with you. Nothing further to add on that.
If you,
JP and Mahavir, let me ask a question on behalf of the
please.
students, because in the pitch, obviously they got 10 minutes, but in real life, in an angel meeting or with investors, they could send a package ahead. What's the right balance you might offer them to think about of what to do in the pitch, what to be ready for in terms of, this, what you're showing on the screen can be very detailed or almost to 50,000 feet? What's the right balance?
That's a great question. That's a really good question. Do not put a spreadsheet on any PowerPoint. I will take you out if you do that as an investor. And then don't say, as you can see, and then point to one cell of like 5,000 cells. No, whenever you're doing a presentation slide, there's like even if you look at this layout of just this presentation, yeah, I didn't put a lot of pictures and stuff like that in here, but you want to have it clear and easy to read on a deck. And we'll go through some of the do's and don'ts at the end there. But even whenever I put financial statements within my data room for our investors, if I'm really going to actually close a deal and the investor's really seriously interested in going through the financials, I do not let them go through the financials alone. Now, everybody else's financials might look clean and easy, but I do what's called GAAP, or generally accepted accounting practice approach to our financial statements. GAAP financials are very complicated. And so I walk my investors through. Actually, it doesn't even matter. We have our own management financials as well. I walk everybody through the story. I do not just send a deck and hope to God that they're going to figure it out, because you have to craft the story, and you have to craft the story from your perspective of why. So, for example, we were pretty, when COVID was about to hit, we were already coming in pretty conservative because we thought there might be a recession in the US marketplace in Q4 of last year. So we had done some things in October of 2019 to make it a little more conservative. When we saw that China had hit in January, we tightened up our underwriting. And by March, we had tightened up even more as shutdown in the US marketplace happened. Now, in our growth projections, we had expected, a massive growth in 2020. But what we said, and we were very purposeful in our communication to the investors, is we don't know exactly what's going to happen, coming in the first couple of quarters of the year. So we're going to pause a little bit. We're not going to shut down operations. We're going to slow down, be very careful, make sure the performance is really good, and then scale it up. And that's exactly what we did. And but if you look at the financials and you just see, oh, it went up and then it's flat, and you don't really understand the story, although most people understand what happened with COVID. In your industry, in your financials, and your story, if you do not craft what that story is, they're just going to look at the financials and they're going to be like, oh, I'm going to interpret your financials the way that I want to. And I'm just going to come up with my own story. Unless you, as the entrepreneur, tell them exactly how to think about the financials and what was going on. So we actually do call outs in our financials to kind of explain what happened when. And what are the things that changed? If we did underwriting model changes, if we increased our market capacity. For example, in October, we went from 7 states of lending to 39 states in lending, right? So if they don't know it and they just look at the statements, they'll be like, so why is this massive jump in October of last year? And so you do want to get very detailed financials. I was going to say before, either go get a QuickBooks account or Xero account or whatever. They can produce the financial statements for you. My opinion is that you should get a bookkeeper pretty early on. I mean, very, very early stage. Because one, it's not a lot of dollars to spend. But if you are running around and you do not have the ability to present proper financial statements and you're scrambling for it, I can tell you, if you tell an investor, hey, you should look at this deal, and you haven't really done your financial statements and put it into a QuickBooks or some kind of financial software to generate those statements for the last month, if it takes you 3 weeks to get a financial statement back, they're going to be like, I don't really know what's going on here, but I'm not very interested. The reason why is the most important thing for them is, do you know the numbers? And do you understand how this company is going to grow as a function of being able to display it? Now, that being said, 9 times out of 10, I invest in the entrepreneur at an early stage. I'm not investing in the financial statements. But having the financial statements shows, I don't even look at a lot of these financial statements, but I will say that if I'm looking for TiE Angels in screening, I'm 100% going to be looking at these financial statements, and you've got to get the basics together. But I wouldn't put a giant spreadsheet in front of any investor on a presentation deck. I would put just the highlights, maybe your top line numbers, your COGS, your expected EBITDA numbers, some of the core metrics, but I would make it nice and clear and easy to communicate. Javier, any thoughts?
No, I think basically you're right. I think in Paul, the pitch or the early, I mean, the numbers and these are not required. I think your initial pitch to an investor in the 10 minutes, or even if you just email the presentation, should be telling us what your strong points are, telling us why we should invest. It should be telling us, inciting interest in us about what you're trying to do. It should be telling us about the team, because most of us at early stage, idea stage, look at the team, their ability to deliver what they're talking about. And if it's a very crowded domain, then talk about the competition and how you're different from the competition. If you have IP or you're very unique, you don't need to talk about what's happening in the domain that you are in. So it's very critical that you have 12 to 15 slides max, no financials at all, unit economics if required, if you're making too much money, or if you're different from what the market generalities are. It's very, very critical that you give us what we need at this point to see, or to seek more questions, to seek more answers, to seek and understand why we would not invest or why we should invest, etc., etc. It's very, very simple, not complicated. But you should, what we are trying, JP and I are trying to do here, is that you should know of all of these things. All of these things should add, because these will happen as follow on when you're trying to raise money. These will be required, and if you say, oh, I'll get back to you next week with the numbers, it doesn't go well, because then we see there's something is not right somewhere. So it's very, very critical to be ready and to know this, and your story and your pitch to match these numbers, and these numbers to support what you're talking about in terms of what you're doing. That's why it's very critical to have all of this ready, but sharing in 10 minutes or via email, none of this is required in terms of financials.
Yeah. Pro forma is almost 100% what you're going to be doing from a startup stage, as far as like projections of your financials, projection of sales. And like I said before, it's not truth. It's really getting the investor to understand the business model. And you've got to communicate that. I mean, say that unsophisticated angels, for some reason, think that this is what's going to happen in the future. I really have not, there's almost zero companies I've ever met that hit their numbers exactly, or even really near to it, from the seed stage or startup stage. So I wouldn't worry so much about, that component of it. But if you've got a very unsophisticated investor, just generally speaking, I don't take capital from unsophisticated investors, people who have never invested at all. The reason why is you're taking on a fiduciary responsibility. Yeah, you're not a wealth manager or a financial manager or anything like that. But I believe that, I, as the entrepreneur, whenever I raise capital, I raise tens of hundreds of millions of dollars, that I'm a fiduciary for the investor, especially if they're not highly sophisticated in my industry. So there's a very high level of integrity and ethics that comes into that. That being said, whatever pro forma you show to them, they're going to discount it, meaning they're not going to expect you to hit those numbers at that level. They want to make sure that you have a very good understanding of what's expected out of the business. That being said, you also don't want to short sell your business either. It's a business that you're raising capital for, so it has to be exciting. So how do you temper excitement and projection? And it's showing that you have a lot of information, and a lot of it has to do with operational understanding, you know how to run this business, you know how to hire the people, you know how to scale this business. And if you don't, your team does and has that experience. I think all those components are super critical. For example, myself, I'd already built several companies for this last company. So from an operating standpoint, I don't think anybody's really said, does JP know how to build a business? I'm past that stage. Even though it's another startup, I've already gone past that process. Do I know how to hire people that are going to be effective at scaling the business? I had already done it before. In fact, some of my old team members were coming back on board. So that was pretty comfortable from that standpoint. They know I was really good at the financials, having been in the finance space for decades. And so I started ticking off a lot of the boxes. Now, the big questions that came up for our industry was, well, what about regulatory risk? And so that's where I had to get a lot more education. I had to read laws. I had to figure out Supreme Court cases. I had to really understand those concerns and then be studied up on it so I can answer questions when those would come up as it relates to the company. But from the performance standpoint, I mean, you can say that you believe in the numbers, and you should believe in the numbers. I believe in my numbers. But at the same time, there's always going to be things that come up that are not going to allow you to create that reality of the pro forma. And that's where there's a dating process with your investor as well. And we'll talk about that in a minute here. So I wrote here, protect yourself and the investor. So, and that's really why I was saying, like, you're in a relationship with your investor. I've gotten to the point, and I'll say this advice, and you'll probably not take it just because I've been there before. If you've got a sixth sense that says, I'm not sure about this investor, just for any reason, whether it's, I don't feel comfortable with them, but they've got a check in hand. I don't care what the dollar amount is. I remember when we were starting up my hedge fund, and we were early, and there was a $5 million check from an investor. And I just was like, there's something off. And then I found out, and I talked to a couple of our brokers and a few other people, that investor had sued 3 hedge funds prior over the last several years. And, you don't know that all the time, but I've come to really get a sixth sense around people and knowing, should I do a deal with them or not? I've literally gone out of my way and have told investors they're not allowed to invest. I'll say something. The polite way I've said is, I don't know if the risk makes sense for you. I think we want to pass working with you. I have had people who've lost their mind because I've said that. I think in the last 4 years, just from building this company, I've turned down probably $10, $15 million. Because if you can't build a relationship with the investor, when the times get tough, I guarantee you, it's all going to go against you. And I've seen both sides of that equation. I'm probably the worst investor for an entrepreneur in a good way, meaning I don't really ask a lot of questions. I spend time with my entrepreneurs. I do quarterly meetings with each one of these CEOs. I talk to them, ask them questions, see how I can help them out. I don't really care about the rate of return. Now, that sounds insane. But like I said, I with early stage companies, everything has to do with me and the entrepreneur and believing in them as a person. And so when you're going through this process, I know we only have about 30 minutes to go, and we'll open up to questions. The valuation cap structure and terms are probably the most dangerous area whenever it comes for you and the investor in terms of protecting yourself and the investor protecting themselves. So let's go this really quickly. So from a valuation standpoint, Javier actually made a good point. Realistically, nobody's doing a DCF model in an early stage company. What you're most likely going to be doing is finding comps in your area. So for example, I was talking to a company in Silicon Valley. They're raising a seed round. Valuation is at 10 million. And they're raising a $2 million seed round. And I was like, that's definitely not the rest of the world. So you really have to understand what are the dynamics of your ecosystem and what is normal for a valuation round in that space. That being said, you have to make sure you're in the right market. Now, I know we're in a Zoom world, and everybody can raise capital anywhere in the world. And the context of what the expectation is a big deal. But the reality is that you need to understand the context of your local community and your friends of friends. The other thing is, if you have the ability, I know one of the reasons why I actually chose to live in Atlanta has to do with my access globally to basically direct flights everywhere I want to raise capital and build business. I had an investor who said, hey, can you meet me on Friday? I think it's literally this Friday, this coming Friday in San Francisco to go play golf. And I'll introduce some other investors. The answer is yes. I just go. And so a lot of it has to do with, are you in the right ecosystem for raising the capital for your industry? So really do a double check on that. Is your ecosystem B2B? So in Atlanta, where we've got a strong B2B marketplace, fintech marketplace, not as strong on the B2C marketplace. So if I'm doing a tech company that's B2C and social media, should be in Silicon Valley. If I'm building a biotech company or a bioengineering company, I could be in the New Jersey area. I could be in Boston area. If I'm building, different companies have, like I said, different industries by the different cities. I don't know, Mahavir, from an international standpoint, I've raised capital from London through Germany, in Taipei in South Korea, all throughout India and the Middle East. What are your thoughts in perspectives from, if we're raising capital and setting the valuation for those kind of international markets and kind of how that conversation dynamics go?
No, pretty much the same. I think it changes from country to country, geography to geography, domain to domain, and I think it's very, very important to be realistic, to understand what's happening around you, to understand, and the other thing I think, more importantly, from valuation point of view, and as just to add to what JP said, to say no to a particular investor, you need to have the right investors at the early stage. To have a strategic investor, to have an intelligent investor, to have an investor which would add value to the project that you are into or the idea that you're doing is far more important than a minuscule 10-20% higher valuation that someone else who's just an investor would bring to you. So it's all very, very critical, because this is what lays the ground for your future growth, for your future fundraisers, and the direction that you will be going into.
Perfect. So your capital raise amount, you want to be targeting anywhere from 12 months to 18 months of financing, because honestly, it's going to take that much more time to get to your next round and hit the milestones and metrics that is going to trigger you going for your startup or Series A or Series B round. And so you need to buy yourself. I really look at capital raise amount, bridging both the business milestones, but also what's going to boost, what are the milestones that are going to hit the next valuation level. So that's a major function of that. So your pre-valuation amount is what it is without the capital. Your post-valuation is you take that valuation, add the capital in, that gives you the post-valuation number. Option pool is pretty common, but be careful on an equity option pool for your startup employees. The option pool is basically a pool of options that gives equity to your early employees. If you don't give that option pool out, it'll get redistributed out to the investors, and you'll lose that equity to the other investors in the company. So take note of that equity option pool. Your cap table is simply all your investors, what their structure is, what's the deal structure, and understanding how much capital they've got in and what ownership percentage they have. So that's that first phase. Second is the capital structure. So it really depends on where you are, again, on location in the world, and what's common there. In Atlanta, I don't see a lot of safe notes. I see a lot of convertible debt and not as much convertible equity, although I'm a huge proponent of convertible equity type structures that don't have a cliff on the debt side. So convertible debt technically is a debt instrument. You're raising debt. It has a amortization schedule and interest that is expected to be paid, but typically it is converted into equity. That being said, safe note and convertible equity came into play just so that it would prevent a cliff where the company is in a financial problem because they have to pay all this debt to the investor. So that's where the convertible equity and safe note structure comes in. Make sure you get an attorney. Yes, you can find on Y Combinator's website or Venture Hacks or a lot of these websites to find your own notes. That's great as a starting point. But remember, the term sheet is not the final subscription document. And typically for sophisticated investors, you are expected to pay the bill, the legal bill, to get that structured. So make sure you've got an attorney on your side that's going to be able to help negotiate those terms, and then finally put the subscription document together for you. They're not cheap. They're anywhere from $5,000 to $15,000, which is a lot of money for a startup. But like I said here, on these terms that we're going to go through, if you do not get good guidance from somebody who's an attorney who has done venture investing, who's done angel investing, you could get really screwed over. I literally had a friend of mine started a company, grew it to about 120 million valuation, and basically the VC on the second round had the ability to fire the CEO of the company, who was the founder. He was fired. The company started financially struggling. And then they brought him back in to save the company, got the company back up, and they ended up selling it. And they sold it for about 140 million to a company called Tandberg, which then got acquired for 1.7 billion by Ericsson. And it was a huge success. But the entrepreneur was basically fired from his own company, and he gave up those rights, and it created mass havoc and almost shut down the whole company. Luckily, he was able to get brought in, but a lot of that has to do with the terms, voting rights, veto rights. Those are typical though. If you've got a major investor, they're going to want to take the ability to prevent you from taking cash out of the system. Those are these participation and liquidity preferences. Each one of these terms are very easy to look up online, how they go into some of these term sheets. Like I said, Y Combinator has these docs, Venture Hacks has these docs, your Founders, I can't remember if the Foundry has these docs, but you can look at each one of them to be able to kind of get the context. So one of the questions is, if you get fired, you keep your share, or can they force you to sell them? Again, that has to do with your waterfall. So if you get fired and in the terms there's a buyback clause on termination, then yeah, you may have given up that right. Most of the time, I don't see buyback of shares as a function within the operating agreement, let alone your own employment agreement. It is typical once you get a VC to kind of lead, they're expecting formal employment agreements to be put in place. But your liquidity preferences becomes an issue. I'll give you an example. Say, for instance, I invest $1 million in your company, and I have a 3x liquidity pref on your deal. And you're like, okay, whatever, I don't really understand what that means. And you sell the company for $3 million, and you're like, oh, fantastic. I grew the company. Now, let's say the valuation was $2 million. I own 50%, and you grew it to, we'll grow it to $4 million. So it'll be easier on the math. So you said, oh, well, I doubled my money. Well, the answer is no. So because I have a 3x participation preference on the deal, I get 3 times my money before you get anything. So it means I get the first 3 million, even if you sold a company for 4 million. So you'd walk away with only 1. Now that's not a bad deal in that case, but there are some terms that if you don't know, they could wipe out your entire capital stack before you even get $1. So being able to understand what that waterfall looks like, your expectations of growth, you should have that context before going in, so you don't get screwed over in that process. I don't nowadays see any more than 2x liquidity preference. Most of the time it's a 1x. In my first deal, on our first round of partners, I actually put in a 2x pref for the investors because I had such a high percentage of ownership of the company. That was to protect my investors as well. And I'll tell you, if you go into later stage rounds and you've dealt with early stage unsophisticated investors, if you do not treat them well and do not do a professional job and you screw them over, I can definitely tell you, going down the road, the other stuff comes back to bite you, in that other investors will be very overly protective and put a lot more restrictions on you because of your lack of taking care of your investor as a fiduciary responsibility. Because early stage investors may not be as sophisticated, or angel investors may not be as sophisticated. So you may be able to take advantage of them, but that will come back to bite you going forward. So those terms I talked about are typically equity specific, all the way down to that preferred equity and conversion line. Common equity is typically what happens whenever you've got a VC and they're going to take the preferred equity, whatever those preferences are. You get pushed down to common equity, which is fairly typical. On each round, subsequent round, the preferred equity shares go to common equity shares, lose those preferences, and the next VC or whoever's leading the next deal ends up getting those preferences. The only times, and I've done this, that you take lines of credit, junior debt, or senior debt, is whenever you are a very strong free cash flow business. In our case, we didn't raise a tremendous, I think that we raised about $1 million in equity. We really didn't need a lot of equity. We generated phenomenal amount of free cash flow. So debt was a function because we were really confident we can pay off the debt pretty easily. But what we did as a sweetener is we added on warrants. What's a warrant? Warrant is just like an option. You have a strike price or whatever the value is that if it gets converted, starts the purchase price of the stock at that level. And it's usually for an extended period of time. You can exercise a warrant typically like 10 years later. And what's the benefit? So the investor who gets a warrant doesn't have to pay the capital gains tax on the appreciation above the amount that the strike price is. Now, below that strike price, you do have to pay capital gains tax, ordinary income tax, depending on the country that you guys are in. I'm not going to go too much into warrants, but I do think it's a great tool as a sweetener to a deal if you're doing a debt financing. But 99 out of 100 as a startup, you're not going to be doing debt financing. That being said, one caveat: my dad did give me a loan at the start of my first company, so I ended up getting debt from family. I still am paying that debt off, I feel like, the rest of my life. But the point is that it's very atypical from there. Let's see, Mahavir, any thoughts or anything on this slide around deal terms and cap structure?
No, I think it's pretty different for India. I wouldn't want to go deep into it. I would rather take questions and see what's relevant to them. I think you've covered it from the US side of it. We'll deal with it when we come to funding, and I think they'll learn as they go.
Perfect. All right, I think we're pretty much done here. This is my last slide. So I wanted to talk to you a few things about presenting. Presenting, it's all about practice. There's just really nothing about it. I did speech and debate whenever I was growing up, and I did a lot of it. And that got me to be really effective at communicating and understanding how to communicate what the main points are to an audience. Obviously Zoom is much, much harder. Now, I even talked to Paul before we were doing this presentation. I said, so what's the time frame of us actually doing this presentation to you guys? And, usually I don't talk more than 20-minute segments, just because based on an online format, people really get burned out pretty quickly. And it's just hard for you guys to pay attention. Mahavir and I both have a lot of stories and case studies to kind of give you some context around it. But the key is that you have to be super engaging, exciting, especially online now. And you're telling a story. So that's the first do. You're not talking about a company. I think there's a Simon Sinek TED Talk about how it's all about the why as opposed to the what, meaning like it's not what your company does that anybody cares about. It's why you do what you do. What is it that in your life got you to get to this point to go start this company, or drive you to go what I call through the living nightmare of this early stage process? It's very uncertain. It's exciting, but it's very difficult. And depending on how long it takes you to kind of get to that next stage, it's very stressful. So entrepreneurs or investors want to know why. And a lot of it has to do with you telling the story. The other thing is, the caveat to that is, if they are not specifically in your industry, do not tell any jargon. For example, I told you about FPD. Nobody knows what the heck FPD is unless you're in the industry. And so in our industry, everybody knows what FPD is. People know, what your expected net default rate of return is, versus You may have different metrics in your industry, but be very, very careful who your audience is. In fact, we typically prepare 3 different decks for our investors. One for somebody who has no clue what the heck that we're doing, one for institutional investors, and one for people who've already been a part of the company and have already invested and they kind of want to just get an update about the business. So we update those actually every single quarter. A couple of them we update every single month. And when it's the intro deck or intro pitch, it's super short, is just there's no jargon in it. It's just explaining what the heck we do. Connecting at a personal level, another do. I cannot tell you, and Mahavir and I have talked about this before, and the last time we presented this, and I talk about it constantly whenever I talk about raising capital. 99% of the stuff that we talked about really doesn't matter. It has to do with you and the investor. And the reality is the investor, if they don't know who you are as a person, you got to get to the level where they trust you as a person, because TiE Atlanta Angels and the Global Angels Group, they're great groups. They're typically focused on companies that are already in growth trajectory. They have some meat to the bones of the company. They're already up, running, and scaling. And so you're telling the story a little bit about yourself and you're connecting, and it's meeting a criteria for a check to be written. 9 times out of 10, whenever you're in the early stage, everything to do with personal relationship. So I have picked up, I can't tell you the number of hobbies just to build a relationship with investors. I've learned fly fishing, sporting clays, golfing. We're doing hiking trips to Nepal. I do whatever the heck it is. I'm going to ask my investors what they're interested in, and I'm going to go meet them where they are, not where I think they should be. Now, I'm not saying everybody can afford all these things. So in the early stages, it was, it could be going out for a drink, get a cup of coffee, but you got to do it consistently as well. You don't build a relationship because one time you had a meeting and then voila, magically you became best friends. And so that's also where you have to understand that the capital that you're raising is over time, so that you build a relationship, so you're expecting them to reinvest from that side. So I'll pause there. Mahavir, any thoughts or feedback or questions?
I think it would be going too far if they had to learn my hobbies, your hobbies, and so many others. I think if they can stick to their core strength, I think if they can stick to the knowledge of their domain, I think if they can be in love with what they're doing and they can show that to us as investors, I think that's something that's a must do. If you're impassionate, if you're not convinced, if I can convince you of doing your business differently, you're definitely not going to get funded. So you really have to be sure of what you're doing, how you're doing it, why you are doing it, as JP said, and be able to convince me rather than me be able to convince you why you shouldn't be doing that or doing something differently. If I'm able to convince you, you will not get the money and you need to restart or reboot.
So the only last thing I'd say is talking about risk and mitigation. You have to address risk before the investor addresses it. Do not get caught off guard when they say, so what's your COVID plan? Like, I don't know. This is what we think we're going to do. No. Almost 99% of the time, the things that you had to be talking about is risk management and how you're managing the risk combined with how exciting the story is. So I'm going to stop there, open it up to the whole screen, and ask you guys to ask us some questions. I know you guys are coming from all around the world, different perspectives, different industries, different ideas, different markets, raising capital and stuff like that. So just raise your hand. Let's see, Augustin, do you have your hand raised? Did you want to ask?
Yeah, that's me. Sorry, my camera's off. Like I said earlier, I'm on a road trip right now and I'm driving. But first of all, thank you guys very much. I really appreciate all the stuff that you've been discussing over the past hour and a half or so. It's been very eye-opening. Something I would ask is, earlier you were talking about how something that investors will look for when they're getting into a venture is, is there that open, expansive, growable market, right? So like, how big is the opportunity really? And then your cash and business make money, right? And so something that we've done at my startup, it's called STG Visions, is we've started to get a lot of customer interest and people are buying our AI analysis, right? but to validate market and validate value, we pay low to kind of get that entry level. Go about.
Augustine, if I can interrupt you and ask you to ask your question, please. If not, we'll put you into chat and
Can't
you can
really price or sell your product at some top-notch, top-tier value where people don't want to take a risk on something new that's that expensive, right? How would you go about so that investors can then see your cash flows are worth taking a look at, if that makes any sense?
Yep. So Augustine, you cut in the middle. Maybe Paul, if you know the company a little bit, could you give them a little more context? Because I didn't completely understand the question as far as like you said it was like high pricing.
Yeah.
Right. So I can.
Augustine, why don't you catch up with us offline and I'll give you a background later on JP and connect you guys.
Absolutely, that works.
Perfect. Jeremy, you had a question?
Yeah, well, just a question. You said that you should not let investor convince you that they know better than you. But in the other hand, we may need their insight and their knowledge. So that's why we want them as a part of the team. So how do we balance the fact that they may know better, but we also need to convince that we can do it by ourselves?
So I know, Mahavir, you can definitely answer this question. My 2 cents are, if you're getting a strategic investor and they know you're raising the capital, you're just having them put in capital, but you really want them on your team to help you out, that's perfectly fine. In fact, CEO of a company I'm trying to recruit right now went from startup to 65 billion market cap. They're one of the largest companies in the world. He was on the founding team. I'm trying to get him on board my company to help us out. I don't really care if he puts money in. He's putting in actually a decent amount. He's going to invest. But he's actually come to our monthly huddles with the team, quarterly retreats. He's actually been a part of the conversation very early on. So by getting him involved in a lot more internal process, they know their expectation is if they believe in the company to quit and come on board, they're probably going to believe in you enough to invest in the company as well. But if you're going to bring them on the board expectation is a little bit different than an angel investor who doesn't necessarily want to get involved from that standpoint. So I wouldn't be too stressed out about you just have to be very clear with the investor. Mahavir?
I think just to add to what JP said, I think a strategic investor will always know much more than you do, because not only does he understand the domain that you're in, he's seen so many like you who've tried to do something similar or are doing something similar, and he's had multiple feedbacks and multiple experiences. So I've always seen that as a startup, you should be honesty is the best thing that you can do. So be honest in admitting what you don't know. Be honest in changing your gears and say, I'm not looking at you as an investor. Can you mentor me? Can you advise me? Can I do things better? Do I need to change things? So it's always great to be honest to someone who's a strategic investor. And that's probably the best thing that I've seen that works for everyone. And there's nothing wrong in it.
Naga, you have your hand raised?
Yeah, hi. So I have a question about the adaptation of technology or developing a new technology. That is, when it comes to a startup idea. So which is better, developing a new technology or adopting a new technology in the process of globalization?
So that's an interesting question. I like it. It really depends. It really depends on making money. I know it sounds dumb and obvious. When you're raising capital, most of your investors are looking for intellectual property that you're creating to invest in because you have some kind of edge and protection and what they call a moat around your business that protects your IP. But even then, I've probably filed, 4 or 5 different patents. That patent process is not easy. It's extremely expensive. It takes 4 years, 3, 4, 5 years, depending on which market you are in globally. But ultimately, you're trying to build a company that makes money, I hope. There's a lot of companies that don't make any money and keep getting crazy valuations. That's a whole nother conversation. But you're trying to build a business, right? So I wouldn't stress out so much, is it a new or cutting edge or something in existing? like in our industry, lending is, has been around for, I don't know how many millennia. So it's not like we're in a new industry. And we knew that technology is eventually going to catch up to where we're going. So what we said is, well, we've got time. There's a huge market growth. Nobody's filling it that quickly. And we've got an edge. So we're going to pursue that. My first company that did extremely well was the dumbest business ever that has made so much money. It was a DVD distributor. We didn't do anything. We were basically salespeople. We got contracts in the US to sell to the Middle East and in India. We're a reseller. We made millions and millions. And so I think we were at peak before I sold the company. We were doing like 300,000-400,000 net a month. And I was a teenager. I'll tell you, I don't think anybody cares that it was in sales of doing distribution. It was a business that was very tangible and made money. I know that sounds very blunt and obvious, but it's really what kind of companies are angel investors, sophisticated angels, or VCs going to invest? They're going to look at more cutting edge technology that you have a distinct advantage in. Javier, any follow on?
No, I'm just saying, just to add on, of course, money is important. It's the question is not new technology or using technology and delivering a solution. What are you good at? I mean, are you a technology person? Can you create, improvise, and build technology? Or are you a good person to deliver something that's usable by the masses with existing technologies, and having to use multiple technologies and put it right, like in a platter that consumers can use or businesses can use? It just depends on what you are good at. I mean, it's from me. For us, we will look at the business viability. We will look at your ability. So if your ability is technology, I would create technology. If your ability is not technology, I won't try and create technology. It doesn't matter. I mean, I've had people who've done, business studies and MBAs and still are running technology companies because they're good at marketing. They're good at go to market strategies. They're good to manage people. It just depends on what you're good at.
Perfect. What other questions? Anybody else have any other questions out there? I'm sure you guys do. We've got a little bit more time to go, about 10 minutes. So you guys are more than happy. I know it's always nerve-wracking.
Yeah, and that question.
Go for it.
So actually, before I'd like to mention this, that we are currently participating in Half Price. So it's basically competition on it, which allows young entrepreneurs so they provided $1 million who wins in this. So in that process, we have made an idea on a company called Aquaform, which usually have developed a technology which we can grow the fish in the cities, like urban aquaculture, where we call the theme urban aquaculture. So in this process, it's becoming very hard to attract the investors or mentors into this unorganized sector called aquaculture, which is all about the fish. So in this due process, when I was searching, I found this called crowdfunding or so on. So how it's gonna work? Is it working, or is it it's just kind of a waste of time about the crowdfunding?
That's a great question. So I've had companies that I've worked with who've been wildly successful with crowdfunding, and other companies just wasn't even worth the time. So it depends on your country and kind of the structure, because now they have crowdfunding that allows you to give equity to non-sophisticated investors, because the platform that you're doing the crowdfunding from is structured almost like a broker dealer to be able to sell securities. So it really depends on your country from that standpoint. But that being said, it really has to do with how effective are you using social media to build a crowd. If you do not know how to effectively bring a crowd and market people to your product, probably not a good venue of raising capital. Very, very difficult. It sounds easy, but you've got to get potentially thousands to tens of thousands of people to get excited about you, your product, or what it is that you're selling. and build a trust and recognition in that process. If you feel comfortable doing that, and a lot of the companies I've worked with, they've got big followings on Instagram. They've done a really good job on social media to build a brand. I highly recommend that you go and do a crowdfunding, because you're basically remarketing through your channels that you've already built up to communicate what it is that you're up to. I remember the founder of Atari put up some game that they were thinking about building. I think it got funded in like an hour and a half, and it was like 10 times over the amount that they expected. Well, yeah, I mean, it's like, from a history standpoint, it's like one of those successful game companies of all time, creating a new game and wanting to crowdfund it. That makes sense to me. But if you have not a very large reach and you're trying to raise millions of dollars, very, very hard to go through that process. Javier, any thoughts?
No, this is good. I'm good with that.
Perfect. What other questions? I think Paul has a short poll after that question. Paul, you want to post that up for everybody?
For some reason, I'm going to ask Darsak or Pradeep. For some reason, my capability is limiting. Are you able to run poll number 4, please? Darsak or Pradeep?
Yes, I'll do that.
Okay.
Poll number 1. Let me go to.
I'm going to ask JP and Mahavir a question, actually, on behalf of the student teams. What if I don't want to raise money? What's my mechanism to, not just for the competition, but just, hey, I don't want to give away part of my company. Any suggestions, Mahavir and JP, that you would offer?
Yeah, I mean, now I know a lot of you are in school, but the average successful entrepreneur is not a teenager or in their 20s. They're mostly in their 40s or late 30s. From a lot of the data I've seen out of Kauffman Foundation. The reason why I think is because you've got 10 to 20 years of experience, you've got savings, you've been in industry, you know what the gap is in the marketplace, you've identified it, and you know how to bridge that gap. And you, in a lot of cases, those entrepreneurs sell back to their former employees or to the industry or the context that they had already built. So, don't be stressed out if you're not going to build a successful .com billion-dollar company in the next like 3 to 5 years. It's okay. If it takes you time, build your career. Mahavir said, you could stay in college, figure out what to do. Let's answer this question. Wait, the question got ended? Okay, it's end the polling. I'm not going to end the polling. I think you guys can end it on the technical side. But
No, we'll let it run for another 20 seconds. Keep going.
Perfect. Yeah, no, so I would say, I bootstrapped the first couple of companies I started. One was a DVD distribution company. Didn't have any money. I didn't know how to raise capital. So I didn't. We didn't have incubators back then. I think there was ATDC in Atlanta, but there was no Y Combinator. The internet was just started. So there wasn't a digital ecosystem for raising capital. And it really was who you knew. And I didn't really know that many people. So I built a business that generated a phenomenal amount of return. And we had a huge exit after only a few years. But I didn't have any capital to get it started. So I used the little amount of money that I had from scholarship to go and start that business. And, we worked it the very long, hard way. So it really depends on kind of what your business, as a lender, I have to raise capital. I'm a balance sheet lender, which means that we don't securitize and sell it on the secondary markets, which means that I have to raise capital basically forever. Thankfully, we generate a phenomenal amount of free cash flow and we do really, really well. But my life is half build a business and operate it and half go raise capital. So it's a full-time job for me because our company needs it. That's what the business model is. If I wasn't in a company, we would need to have somebody to make it successful to be really good at raising capital. So it really depends on that. Service sector businesses typically don't need capital, right? If you're a professional services company, you're doing consulting work or IT work or stuff like that. It's labor specific. And I'm sure Mahavir, you probably voice the same. And do you have any thoughts on there?
No, I totally agree with what you said. The other thing is that even if you don't need money, sometimes a third-party validation with some investment is always good, because sometimes when you're living in your own bubble and you're profitable and you're not burning and you're growing at a pace that you want to grow, it's fine. It's great that you don't need money. But sometimes a strategic investor at your terms, because you're not pressurized on cash flow, you're not pressurized on raising money, you can actually enhance the valuation of a company. So if a strategic investor comes at a very small nominal equity, small sum, not only does it validate what you're doing, also you have someone that you can that has added value to your company, and the valuation goes up, and it would be helpful in opening many doors because he or she is very, very strategic in the domain that you are in. So sometimes and there's no free lunches, as we know. So putting money in does make me take a deep dive into what you're doing, and that does endorse what you're doing, and strengthens your team, your ability, your outreach, and your brand.
One thing, before we end it here is just tenacity. I'm just telling you, at the end of the day, and I've always had hopefully you guys believe in yourself. I know that sounds very obvious, but you have to believe in yourself ultimately, whenever it comes to entrepreneurship. I still to this day will call it the living nightmare, only because as soon as you think you figured it out, it is not figured out at all. And usually every time I feel like it's going well, that's usually whenever I become extremely cautious on how the company is performing and what's going on. But you just have to keep at it. And like I said, there is a component of being able to determine if the company's working or not working. But the reason why I beat out a lot of my classmates who've given up on entrepreneurship isn't because I am smarter than them at all. It has simply to do with I did not give up. And I kept trying, and I kept trying different things. Even companies that worked out. I remember when I sold my first company, it was basically the funding for my second company and in the hedge fund space. And we were doing really well. Performance was really good, but we were struggling raising capital. That was really my first how to raise capital. And then the crash happened. Performance was phenomenal, but a lot of the investors, we had what's called a 90-day redemption. You can take out your cash. You email me today, in 45 to 90 days, you get your cash back out. So a lot of our investors were using us as their cash register to take money out of the fund. Well, that's not good. So I almost went to the point where all of the capital, all the millions that I had made from the previous company, I was about to go file for bankruptcy if it wasn't for about, I think, like 6 to 9 months. And thankfully it worked out right at the bottom. Our performance was good. We were one of the top 10 mid-markets hedge fund in the world, and everybody got the word how we had done during the crash. And we raised, like I said, almost a couple $1 billion after that. But even if it didn't work out, and you can ask my wife, Mary, we were holding off our wedding for like 3 years, or 2.5 years before we got married, because I was trying to figure out what was going to happen with the company. I am telling you, you just have to keep at it. Now, there's a lot of cyclicality with the marketplace right now. There is so much cash in the system globally because of central bank printing. So for those of us who have assets in our equity markets, bond markets, stuff like that, have had huge growth in our net worth without doing anything, which means that angel investors, there's a huge amount of pent up cash to deploy it productively in the marketplace. Those people are looking to raise capital between now and I'd say between the next 5 years, maybe even 9 years, give or take. There's just a lot of cash in the system. So I think it's important that you take advantage of this as far as the market is concerned. When it globally cyclically turns over, cash disappears. And when it disappears, if you're in the middle of trying to do a cap raise, guess what happens? All these deals blow up. And don't look at it as just because it's your fault. There are usually a lot of major factors beyond your control of why things don't happen the way that you want to. You just have to have that constant tenacity to create a reality of it. And, having been on both sides of it and actually up and down through the roller coaster, a lot of it has to do with your own internal well-being, mindset, and perspective to remain healthy. That's one thing that people have talked about this last year with COVID and lockdown, your mental health, the mental stamina that's required to be an entrepreneur and serial entrepreneur over decades. It's like being in the special forces. I work with a lot of people in the special forces space here. It is very grueling. It's very intense. You got to take care of yourself. I know a lot of entrepreneurs burned out, blew out their relationships, blew out a lot of personal life responsibilities, and they were not able to sustain it for a very, very long time. It is a sprint marathon. It's the only way I can describe it, because it is lots of sprinting and a very long race that may never end. And it's also addicting. I love building companies. I love the people. I love working with people like Paul. I love people like Mahavir, where we tell our stories and we work together. It is a band of brothers, or it is a family that we've gone through this process. And it's not really dissimilar from each. It all feels like it's happening to you, and you're the only one that's gone through it. But I can tell you from personal experience, there's a lot of people who've gone through that struggle. Take advantage of the TiE community, because so many of us have gone through those ups and downs and those challenges from literally where you guys are sitting around the world. Take advantage. This is really a great time. So thanks so much, Mahavir. Thanks so much. Any parting thoughts?
Kanchan had a question.
What we can also do is take questions. If you guys have some time to stay on and answer via chat, but go ahead and take this as the last one, and then Mahavir, any parting thoughts? So.
Thank you, Paul and Mahavir, sir, and thank you, James. Wonderful presentation. So my question was, if you are an entrepreneur, what are the pros and cons, as in, for you, if you're looking at angel investors versus a group of investors, angel investors versus institutional seed investors?
So basically sophisticated versus unsophisticated angel investors, correct?
It could be sophisticated angel investors as well, and it could be somebody like Angel List, a couple of angels coming together and investing in your company, and the third is the institutional seed investor. So those are three, and I was wondering, what are the pros and cons of each?
So I'll give you the short version. So I do a lot of syndications. Paul knows we've done a lot of syndications where there's a lead investor on the deal, and they'll syndicate a whole bunch of other unsophisticated investors in a pool through a single purpose LLC that's going to write a check. Those are great because you don't have the headache of managing 10, 20, 30 people as an investor. It really then it becomes, who is your point of contact and their sophistication. So if they're very unsophisticated, that can give you some other headaches, but I love syndicates that I don't have to manage the investors within them, which is why I believe in TiE Atlanta Angels and the TiE Global Angels program, because it is a really good deal for the entrepreneur to really have a single point of contact. Sophisticated institutional angels, they're going to set the terms. And like Mahavir said earlier, if they're well-known, it's a stamp of approval, it's a validation, especially if they're globally recognized. They can give you a big leg up on a forward-going basis for your next round of funding. So I typically try to get investors that can help me bridge to the next round, or if I'm investing, I want to help bridge those deals to the next round of investors as well. And then versus individuals, it's usually friends and family. They're great to have. They're your biggest supporters, but if they're unsophisticated, they're typically not very useful, which is why I'd be overly cautious on unsophisticated investors that may be giving you a little bit more money than they need to from a risk management standpoint. So you have to be very careful, because if your uncle or aunt writes you a check for $100,000 and they don't do angel investing, but they're like, oh, my nephew or niece asked for it. It sounds good, but it could cause a lot of problems if they lose that money, right? So, entrepreneurship is still higher risk, right? So out of the 16 companies I've helped build, only 4 have really worked out. Now they've been massive successes, but those other companies that haven't worked out, thankfully, I haven't really lost any money for other investors, but that's a big risk. You take $100,000 check or $50,000 or whatever the number is, it's all relative, and you lose that and it doesn't work out. You have to understand what the consequences are and ramifications from that. For an institutional investor, if they lose the money, I mean, that's what they do for a living. Hopefully they know how to manage their portfolio risk. Have you any thoughts on that?
Yeah, so I'll just answer that question quickly, just to add to what you said and do my closing remarks, Paul. Obviously, when I seek funding today as a startup, you should be seeking funding out to an individual angel or a group of angels, organized or recognized angel networks, or to an institutional, depending on what your next round will be. Where do you want to be 18 months from now? If angels will help you raise that next round, if angels will help you grow to the market that they need to grow, if that's where you should go. If institutional endorsement is required, and a fund is more important to you, because you would need larger sums of money 18 months down the road, because you would have done where you would need a huge number, I would go there. This is just at an early stage. You should be planning or thinking of who are you going to and what are you going with at that next round should determine who should you go to today. So it's very, very simple. You should, as an entrepreneur, as a startup, you should be able to see your roadmap for the next 5 years, because this is your livelihood. This is your living. This fundraising is just an interim thing. Whether it comes today, tomorrow, from one person or 10 people or an institution, it's irrelevant. Where is the eventual goal going to happen? Where is the end goal that you want your company to be? Is it going to an IPO situation? Then do you need angels today, institution tomorrow, or you need institution today, VCs tomorrow? Whatever, you have to plan that roadmap. That's where my closing remark: advisors, mentors, organizations like TiE, reaching out to people who are dedicated, who are giving time and energy and learnings with you selflessly, hour after hour, is very critical. So reach out to the TiE chapters locally, ask them to reach out to us globally or nationally, whatever the case may be, and we are there to help you. And that's where networking, that's where reaching out to different people, your peers, your members, your network, and to organizations that are global in nature is very, very critical. So, and I thank the entire TiE University team, Pradeep, Paul, whoever else has worked. I'm bad with names, and I thank JP for doing a great presentation as always. I just butt in with my stupid comments here and there.
Not at all, Mahavir. Thank you so much.
Yeah. JP, it's always a pleasure to lead or assist you in this. Thank you so much.
Thank you so much, Mahavir, and thank you so much, JP. I'll share the results of the polling first, and then we will go into the next part. I hope all of you can see the scoring results.
My way of always knowing it's a great session is if I can learn 1 or 2 or 3 things that's helpful in my journey. I always say, I hope that is true of the vast majority of you all. Figure out, whether you, and by the way, put some, I think JP and Mahavir, can you stay on maybe 10-ish minutes and watch chat in case any questions come up? And if not, put it into the WhatsApp group. We can certainly get you information over the next week as student teams are probably still navigating where they're going, right?
Sure.
Awesome.
On behalf of the organizing team and students representing, I think, 11 different nationalities, that's something wonderful. We learned yesterday that although the number of countries that are participating are limited, but the nationalities are not limited. So we have 11 different nationalities here on the call with us. It is my pleasure to thank both JP James and Mr. Mahavir Sharma for having given your valuable time to us and deep insights. I'm sure one set of students would take a lot of lessons out of this as to where they can use this as the platform and jump ahead. And the other set would probably be awakened that, okay, these are things that I didn't know, and now I need to go and do that. So either ways, you have sparked that inquisitiveness in the set of students that are here. And once again, we are deeply indebted to you for having been here with us. Thank you so much. So we'll take a 5-minute break. I request the winning teams to stay on. I can see Adil Mohammed with an O. What does that stand for? Are you an organizer? I'm surprised. Okay.
Who is
sorry.
everybody?
Sir told others yesterday. He told to put F. Today he told to put O.
Oh, okay. We wanted to avoid the F word, so cool. So may I request all of you, the winners to stay, take a 5-minute break, go stretch your legs, go to the loo, and come back, fetch a cup of coffee or water. For the next half an hour, we will work on the pitch, elevator pitch, as in a workshop kind of a mode. So thank you so much.
JP, you'll upload or provide me the slides. I'll put it on the shared folder.
Time for some music. Shall we all take a break? Yeah. So, Dr. Lopez, any specific requests?
Sorry for the interruption. Can I know what kind of a code that you have to put in front of the name? Actually, I have absent for the yesterday and before.
We're going to tell all the rest of the folks go take your 5-minute break. Naga, what are you a team from what city and where? Tell us a little more about it, so then I can help you.
Yeah, actually we have a team name called Aquaform India. So we got runner-up in the university pitching fest from the TiE Andhra Pradesh.
Okay, then your code would have been an R. So cover that. Yeah.
Thank you, sir. Thank you for that.
Yeah, but for today you can log off, Naga, because this next set of half an hour is only for the winning teams. Yeah, thank you so much for joining us.
We'll see you next week with more work.
Sir, where do we find yesterday's recording?
It'll be put into the shared folder that we showed you at the very beginning, probably in the next 24 hours or so. Is that right, Pradeep?
Yes, it'll also be up on the TiE University YouTube page. So the short link for that is bit.ly/TiEU YouTube. Right. And please do like our Instagram page so you get real-time updates on everything. Right. Thanks. Good. Take a 5-minute break. We'll be back after the break.
And good luck, Adi. I think your finals are tomorrow at the Chennai chapter, right?
Yeah.
How many teams are there?
I don't know. I'm not sure.
No? Okay. I think it's a large number.
16, 1-6. But the interesting thing is the number of jurors outnumber the number of teams. There are 24 jurors and 16 teams. So wonderful.
Well, hopefully they're also playing mentoring, because what I found in many chapters, they've asked the judges to act both as a mentor in providing feedback and also judging. So hopefully that's the reason. So all the best to you folks in the couple of chapters that are still running their competition.
Thank you.
You can override my screen, Pradeep, whenever you're ready to start again.
Yes.
What happened to the music?
Yeah. Was just trying to get the beat up a little more.
Okay. You have to be a lot more, Pradeep.
Okay. Let's change the music then.
We're going to put our students to sleep otherwise, together with the coffee to bake them up.
So because we have a lot of students now from the other side of Asia, so let me put some Indian music for them, right?
Okay. I'm going to take 2 minutes of my 5-minute break. I'll be back.
Please do.
If not, go ahead.
பொந்துல யாரு மீன் கொத்தி தண்ணியிலோடும் தவளைக்கு கம்பளி பூச்சி தங்கச்சி அல்லி மலர் கொடி அங்கதமே ஒட்டார ஒட்டார சந்தனமே முல்ல மலர் கொடி முத்தாரமே எங்கூரு குத்தாளமே
சுருக்கு பையமா வெத்தல மட்டையம்மா சுமந்த கையம்மா மத்தல முட்டியம்மா தாயம்மா என்ன பண்ண மாயம்மா பள்ளியம்மா வேறாண்டி சங்கதிய கூறாண்டி கண்ணடிய காணாண்டி
அன்ன கிளி அடியால மர கிழவண்ண கிளி நல்லபடி வாழக்கிளி இந்த மண்ண கொடுத்தானே பூர்வ குடி கம்மங்கர காணி எல்லாம் பாடி திரிஞ்சானே ஆதிக்குடி நாய் நரி
Good. I think we will stop Paul's share screen. I will share my screen. Cool. I hope everyone's back after your breaks. Cool. How do I make this window bigger? Cool. So if you're back, just put your cameras on so I know you are here. Brian is here. Ankit is here. Hi, Srividya. Good morning. Samir is here. TJ is here. I saw TJ in the pitch at Atlanta, so I remember TJ now.
TJ is the other half of the Inside Optics team.
Yes, I saw them pitching the other day, right? So, is that the Georgia Tech building behind you on your wallpaper or whatever?
Yeah, it's one of the buildings they have on campus.
Ah, cool. The one that you own, or?
Well, not yet.
A little older than him.
That doesn't stop him from buying it, right? So.
TJ, are you doing classes on campus, or is everything still? And you're probably also doing dissertation work. I don't know.
Yeah, so I'm working on my dissertation, but I did some MBA classes on campus last term, and then we'll be fully in person in the fall.
Awesome.
Cool.
Back to you, Pradeep.
Thank you so much, Roy and Ankit and Sai Harini. Please put your hands up in the air where I can see them, and I want to know who you are. Please put a W there in front of you. Sai Harini. Sanjay Kumar, you are from which chapter? And there's one name that says Maniratnam. And Lindsay A. If you are from the winning teams, request you to stay on, or else we will catch you next week in the next workshop. Maniratnam, Sanjay Kumar, Narendra. Oh.
Keep going. I think.
Perfect. So, very good evening. Good to have you back. Some of you sent your elevator pitches to me on video, and some of you have sent it as a text. We've had a look at it, and I have asked my friend Dr. Srividya also to join us today. Dr. Srividya is a poet, a published poet. She's published 3 books, anthologies on her poems have been part of multiple anthologies, as well as she has published her own collection of poems. Srividya also teaches English at the GMAT and TOEFL level. So she will give us 2 insights today. One from an English perspective, if we can do something to the words that you are using for your elevator pitches, and also as a tech neutral person who doesn't understand these technology aspects, because I have gone through all your presentations. Not that she doesn't understand technology, but from a very from a very third person perspective. So that's what Srividya will do. So some of you have not sent your elevator pitches. I'm assuming you have not done. I think we have a few people who are new today. Danusha, I think you were not there on the call yesterday, right? Ivekart, Danusha. Yeah. Okay. Where are you from? From Chennai, is it? Okay. Are you a winning team? Because Chennai has not had their competition yet. So, Danusha?
Yeah. I have my chapter finals tomorrow.
I'm sorry, I can't hear you.
I have my chapter finals tomorrow, sir.
Your finals are tomorrow, right?
Yeah, yeah.
Yeah. Okay. Then the W doesn't stand for you. The W is only for the chapter winners. So that's why I was a little confused. Yeah. Sure. So I have. Let me open up the files that I have received. I've got the elevator pitch from Aaron, from Brian, from Vaibhav, from Stuart, from Samantha, and from now Kushal, right? So what we will do is we will take 1 minute each, and those of you who have sent this, those of you who have sent this, if you could just go ahead and pitch to us. Let's have a look at it, and then we will come back and discuss it. So Jeremy, I think you haven't sent yours, right? Do you want to do it today? Would you like to do your 1 minute elevator pitch today?
I think Jeremy is from the team that Stuart sent in the.
Yeah.
Oh, okay. Oh, okay. Yeah, got it. Okay. Cool. So, Brian, why don't we start with you then?
Sounds good.
Good. So on Brian's, I wanted to bounce something with Dr. Lopez as well. Good that you took the point that I said yesterday about using the word police so that it becomes kind of universal. In the US context, that's fine, Dr. Lopez, with investors, because I'm not very sure would investors prefer to have the word lawmakers or whatever. Not lawmakers, sorry.
There's a lot of controversy, so the answer is there's no good answer.
Right. Perfect. Cool.
Yeah, I'm trapped no matter what.
Right. Okay, Brian, your minute to fame starts now.
Hi, I'm Brian from Survivor. Right now in America, there is a big disconnect between police training and real-world situations. Victims of police brutality, such as George Floyd, aren't going home at night because police officers aren't prepared to empathize with people and handle complex situations. Survivor makes communities safer by providing realistic police training that teaches de-escalation and decision-making skills. Our team is 50% police, and we serve organizations from city to military. Since 2020, we've booked 1.1 million in revenue across 10 states. We're raising our second round to generate over 4 million in annual bookings by 2022. Our round is 45% subscribed, so if you're interested in the future of public safety, let's talk.
Perfect. Sounds pretty good, Brian. One of the observations that I had on this part was where you speak about training on de-escalation and decision-making skills, right? Do you think there's a need to set the context that today that's kind of absent in the police training? Because otherwise I would assume that it's already part of the training. So what is it that you're bringing new on board?
Yeah, I think it's the issue with how the current training methods that they have, and they're very limited, and they don't really stress communication skills that much. It's more like use of force and whether or not you pull the trigger. That's really what they emphasize. I could spin it off that way. That's possible. So I
And
guess
the second question I would have is, then it also means that there has to be a systemic change, right? The system also has to change. Just by training a few officers, it doesn't change overnight, right? So what would be the answer to that? I'm just putting these questions out, which I, as a layman, I'm getting in my mind, and then maybe you should start working on them. So once we're done with the others, maybe you can come back and just do this once more again, right? Does anyone else have any feedback or input that you would look at it from your perspective? Srividya, anything from your side?
Yeah. Brian, I thought that was a good job. I think you spoke slowly and you also spoke with a lot of confidence. One thing that I would ask you to be a little careful about is generalization. I know that the issue, and it's not just in America, which is the second part of my feedback, when you say police without saying some police or quite a lot, or without giving a number or a statistic, it looks like you're doing a kind of a blanket ban on all cops. So it might help your case a little better if you did not generalize, if you didn't say because some police officers are not prepared to empathize. So the word some will actually keep you a little safe as well, because you're not generalizing. So that's one. Second, if you do a little bit of research, just even basic research, you'll realize that this problem is not just, it doesn't just pertain to America, it's pretty much in many, many parts of the country, but manifests itself in different ways. So depending on whom you're pitching to, if you know your audience and there are jury members, so we know George Floyd because we're reading the news, but this was something that Pradeep had shared with me. If you're looking at a different country, can you pick up a case from there that brings instant recall? That way you ensure that you create a connection between you and the person who is listening to you. Yeah, so that's my feedback. Thanks.
Great feedback.
Cool. Some food for thought. Thank you, Vidya. Can I ask now Kushal to go? Ankush, would you like to go?
Yes.
Yeah, cool. I request everyone else also to look at it and give your perspectives as well. Yeah, your time starts now.
As Narayan Murthy once said, there is not been a single innovation from Indian students from last 70 years of Indian independence. So, so we now, Kaushal, decided to go through the ground and see whether how the condition is. In search of problem, we went to remote tribal area school of Orissa and Maharashtra, where we saw the students from first to fifth class sit in a single classroom. So there were not a good infrastructure even. So let's leave the innovation. But there were many students who even lack in getting good education. So we came up with the idea where we found to provide we came up with the vision to develop and grassroots entrepreneurs. And to satisfy this vision, we have come up with satisfying the objective to provide education to the remote rural areas and build up an innovation labs. So where students will sit together and playing and can make a playing toys and can enhance their skills. So thank you. This is all about.
Yeah, 1 minute and 6 second, Ankush. Okay, so a couple of my points on this. One, although we in India know Narayan Murthy well, I am not really sure whether in the global context that's true, right? Infosys is a huge company. Everyone knows the company, but I'm not sure whether Narayan Murthy is known. And second thing is, you took off on a negative note. Although the challenge that Narayan Murthy spoke about was about innovation. I know you tried to connect it to the fact that we are talking about innovation, yet even the basic things are not available. So a better way would have been to kind of highlight the problem, because for someone, including people like me and Vidya who are in bigger cities, to empathize the fact that even fundamental education is not available in rural India is something that's difficult, right? For you, Ankush, because I know you personally after having done those interviews, I know you know that with real life experience, but not everyone understands that. So maybe you could bring in those big numbers saying that, do you know that X number of students in rural India don't even have access to a proper classroom. They share classrooms, right? They share the same teacher, so the teacher cannot come at this at particular hours for students, so they have to have classes sometime in the morning and the afternoon. Sometimes the teacher doesn't come because the teacher has to tread like 6 or 7 kilometers by walking to those upper hills. So maybe if you could set that context, and then how is it that you're going to solve or change that problem? I think that would make sense, because in this 1 minute, I think talking about innovation and then talking about grassroots teaching, maybe there's a small losing of interest that could happen. Second question that I have is, are you focusing on giving them basic education, or are you focusing on giving them basic science skills through these games or labs?
No, we are with the learning and development grassroots entrepreneur. So and our objective basically is to provide an affordable practical education in school of remote rural areas through innovative labs. Like we will develop an innovative labs where we have the concept of ATL labs, like utter twinkling labs in India, which has been developed by NITI Aayog in India. So that is how we are.
Okay. Okay. So assuming that 50% of the jury on the finals is not going to be Indian, then this may be a little dicey ground, because they do not know what Atal Tinkering Labs is. So maybe you need to really revise that aspect. One of the advantages that we have in India is that the numbers that we have are so huge that they're probably much more. India by itself is a continent, right? We're the only subcontinent, so to say. So that itself gives us big numbers from an investor perspective, right? So like Jeremy was talking about, let's say 100 million.
Yeah.
I'm sorry?
6.
Yeah, no,
we do have 6 rural areas, right? So actually, if we consider a school
absolutely.
from a single school,
we are like a Europe by ourselves, right? So you have to set that context also when the numbers come in, right? Vidya, any things from your perspective?
Yes, Ankush, I agree with Pradeep. Tell a story. I would have perhaps thought about how childhood is nothing without toys. And have research that backs up the idea that children learn better in the playway method. So I agree with Pradeep. When you have just a minute, you don't take the time, while the Narayan Murthy quote is powerful, you don't take the time there. You spend more time talking about what you want to do. Because I think towards the end of your presentation, from what I could read on the screen as well, you lost steam. So we didn't hear too much about what you want to offer in terms of Navkushan. Secondly, if you start strong, I think the attention of an audience is the most in the beginning, at the end. That's what I've learned in my decades as a public speaker. End strong as well. Somewhere towards the end, you were like, you were literally mumbling the words. So make sure that you practice. I think with a bit of practice, the issues that the areas that Pradeep and I think you might need a bit of work on just disappear, because now you know how to do it. Okay, it's taken a minute and 6. How do I reduce that? Can I remove this? Can I replace it with this? Can I make a positive, because you're talking about children at the end of the day, can I make a positive impact by creating a certain image in the audience's mind which captures their attention, but ensure that if you've started well, ensure that you end well as well. So that becomes the lasting impression you leave in the audience's mind.
Super.
Focus on practice.
Perfect. So I think practice has to be there. That's probably the next part that we would look at. So can I ask TJ or probably Jeremy, what did you understand from whatever Ankush spoke? You stay in a different country, in a different culture. What is it that you grasped out of it?
For me?
You're on mute, TJ.
Yeah. Okay.
Yes,
so
Jeremy.
So what
My
I
wingman.
understood, what I understood is that there is a lack of opportunity in some part of India. Some population doesn't have the same opportunity, and that may create like there is maybe really creative mind with a lot of ideas and innovation that doesn't get the chance to bring their ideas. So they want to tackle that and to see what those people has to offer. And I think I got it right?
Yeah. Okay. TJ, what's your take on it?
Yeah, of course. And I would just echo many of the things that you've already touched upon, but maybe even highlighting the grassroots sort of efforts that you're using as well, especially because some of the conditions is just not necessarily translatable from India to some of the other countries around the world. So that might be interesting to highlight.
Right. And maybe also because it's a competition or whatever, you also need to bring in the social aspect of it. It's not a pure commercial proposition that you're bringing. It's a lot of social aspect as well. Then it kind of touches the emotion. So the investor is kind of a little more in shaky ground because now he's connected by the heart kind of a thing. Cool. Samantha, you would like to go next?
Sure.
Right. My colleagues have transcribed whatever you spoke, so I hope they've done a proper translation. Yeah. Please go ahead.
Okay. All right. I'm good to go.
Good to go. Your time starts now.
Hi, I'm Samantha. Have you ever struggled with decorating your space? I know I have. Our homes are our castles. We want them to be a place of comfort. We want them to be the best reflection of us. A wall of art can define a space, express who we are, and make a house a home. But finding artwork we love can be time-consuming, and arranging and hanging it can be daunting. We are WXH, and we're here to help. Our mobile app will help you discover artwork and decor you love, design magazine-worthy wall arrangements, and hang your art exactly where you want it. We'll determine the dimensions of your space and provide you with recommended layouts and exact placements. You get to create your ideal space, and we'll be there to help you along the way. We're an early stage startup with big dreams. We're working on our beta release. If you're interested in joining our beta testers, offering business advice, or looking for artwork inspiration, let us know.
Super. Bang on the minute, 59 seconds. Perfect timing. Good. So some of my observations, Samantha, is somewhere down the line, I'm not able to differentiate your proposition to an interior designer, if that's the right word that you use in the US. Because when I saw your pitch deck, I understood that like people struggle to place art on the walls, right? They don't know which location, what dimensions, what size, how much length do you leave it from the center? Do you hang it in the center of the wall or on the side? But when you started speaking here, it felt a little more that you are kind of helping them on the interiors rather than specifically sticking to art. So because like you use decorating your space, but I thought correct me if I'm wrong, okay? From your pitch deck, I understood that it's not about just decorating your space, but it's very narrowed down to a very niche area of art and walls. Am I right?
Yes. Yeah.
Yeah. So somehow that's not coming up on the 1 minute elevator. It's the immediate question would be, how are you different from an interior designer or anyone else who does interiors of a house? So I think that's one thing that you need to look at. Maybe one of the other things that you need to also look at is that I know from an Indian perspective that art has become now like a status symbol. People buy earlier, we didn't spend money on buying art, and I think in the US as well, at least the upper middle class or people below the middle class or middle class, I don't think they're still putting money into art. But now, probably because of the higher incomes, people have started looking at it. So bring in that number as well as to how many people are now buying art, and maybe they're not putting it up the right way. So the emphasis is more on the wall and lesser on the art. So
I have a question.
Yes.
I've used the word art, but really it could be like family photographs. I just didn't want to list everything you could put on your wall. So do you think I should move away from art specifically? Because we're not trying to be status per se. It's just like you want to hang something up, we'll help you.
Okay. So this is the perspective I've got from seeing your pitch, right? I saw the deck, and that's where. Now, please tell me this: you are narrowed down only to the walls and anything that hangs on the wall, or let's say, do you also do a flower vase?
Anything on the wall. So it might be mirrors, picture frames, artwork, like anything. I guess if there was tapestry, anything that you put on the wall is what we're talking about.
Okay. So we will hang everything else except your clothes, right? Good. So I think, then we need to kind of maybe tweak these words. So Vidya, I may need your help if you could tell us what do you think might be a more better word to kind of put in what Samantha is saying.
I think the word wall art is a great word, but I think you don't need to elaborate on that. You could say we're not just talking about art, we're talking about anything with meaning. It could it could include your grandmother's patchwork quilt, for example, or it could include a tapestry, or a collage of photographs. So just by giving them a few examples, you're also expanding their mind into thinking that you're not just discussing art per se with them, but you're also talking about other things. And then when they ask you the questions, you can tell them, if you have a list of things that you can hang up for them, then you can tell them at that point of time what else you have in mind. But the word wall art works, but maybe a few examples of what you mean by it might be helpful, Samantha. Yeah.
Yeah, and I think the numbers of how many people are now thinking of that seriously, right? I have hung up multiple stuff on my wall, and I never even thought about it before I saw your deck, right? So maybe some perspective as to how many people are looking at it, kind of a thing. One case that you could also use is the Zoom context now, right? People are getting a peek into people's lives. I never would have seen Samantha's house and Austin sitting there on his chair always, right? Now I am getting a peek into that. So that also is a context that you could say, is that in the Zoom world, people are getting peeks and people are more conscious about what they want behind them on the wall, right? Cool. Dr. Lopez, anything from your side? You're the fly on the wall. You're on mute.
Okay, too many windows. Samantha, is wall hangings an alternative of which you then, in the same sentence, keep art? By the way, don't get overly worried about our competition. They will have heard you go through 10 minutes, 5 minutes. You've done all of that. The 1 minute is after. We're really trying to prepare you, as physical gatherings get back together and you're meeting with, in a group of 10 people. How do you, in a minute, get people's attention to want to know more? So for that one, I'm just wondering if wall hangings might be a more, and such as artwork, might be the shortest set of phrases or phraseology.
Right. There are two pedantic people that I like whenever I write some stuff, and both of them are on the call. Cool. Okay.
I take that you mean it in a good way.
That's a compliment. Absolutely a compliment. Okay. TJ, you would like to go?
Sure.
Perfect.
Can you hear me?
Yeah, I can hear you. And maybe if you want, I can share what Aaron sent us. Cool.
Yeah, I might love to.
Your time starts now.
Great. Hello, I'm TJ Legros, and I just found out I'm going blind at 30. There are 154 million people who can lose their vision in the US alone, and 90% of all blindness is preventable. We have built a smart, mobile-enabled platform to ensure that our customers can capture patients' data without needing to change their patients' behavior. We do the heavy lifting with machine learning and computer vision, so our customers don't need to specialize skills to give the exam. We already have FDA classification confirmed, we already know the exam is reimbursable, and we already have paying customers. So if you want to help us eliminate blindness, come talk to us.
Cool. 37 seconds. Right. So my observations on this, TJ, is one, maybe Vidya and Dr. Lopez can add on the English part when we are talking about, 1 second. Yeah. So here when you're saying lose their vision in the US alone, and then you're talking about 90% of all blindness, it kind of looks like they're two different contexts. This is my personal take on it. Maybe do you think 90% of all this is preventable, or something to connect the previous line to this? Because right now it looks like 90% blindness is a different thing, and 154 million losing their vision is a different thing. Kind of one is that perspective. The second perspective is this the statement where you're saying our customers. So again, as a layman, I am not really able to find out who is that customer, right? Is it me personally that I do my own examination, or is there a professional who's supposed to do my examination? Is it my personal physician or a nurse or whatever, right? So that probably that part is missing. And now that you've done only in 35 seconds, you still have some more time. But the wow factor is already there. Wow. It's blindness and it can be cured, right? Something that can be done and people are not doing anything about it, kind of a thing. So that wow factor is there. We need to kind of reinforce that a little bit together. Yeah. Vidya, you're on mute. You're on mute.
TJ, I think it's a great idea. And I think
Vidya, we are hearing you very feebly. Can you speak a little louder, or is something within? Yeah.
No,
Not very audible.
Is this better now?
Kind of, okay. Yeah.
Okay. TJ, I think you've, from what Pradeep has said, you have another 30 odd seconds that you can definitely use to talk a little bit more about your idea. Perhaps if you speak a little slower, it would take care of a little bit of that time. But having worked with Pradeep, I think what he's trying to say with those two sentences and how he sees them as something different, what's happening there is I'm not sure whether the sentences are connected. The number of blind people and 90% of it being preventable, do they refer to the same thing? I think that I'm assuming that's what Pradeep is trying to say. Or are you talking about two totally different things?
No, this is for the US. And this is coming from the same study from the CDC.
So you're saying 90% of the 154 million people who can lose their vision in the US alone is preventable? Or are you saying 90% of all blindness is preventable?
There are a couple different studies, but in this case, 90% of all of the blindness of the 154 million people is preventable.
Okay, so what you need after alone is either a comma, like the Oxford comma, or you need a full stop and a capital A to say that you're talking about two totally different things. Otherwise, my assumption was that the sentences were connected. Or you could use a demonstrative pronoun like a that or a this or a these. These are small things, but it distracted me. When I was reading through, I thought a lot about the sentence because I wasn't sure what you were referring to. I get it when you say it, but if you're presenting the content, it might help. So people just move on to what you actually want to talk about. And if you speak a little slower, you will have the opportunity to make full use of that 1 minute. It's a long period of time. And also talk a little bit more about what you have to offer.
Sure. Thank you for the notes.
And one more. Yes, Dr. Lopez.
Pradeep, don't put up the information because people are going to start reading it. I'll bet TJ moved his focus from speaking as a human being to suddenly reading.
Right. Sure,
TJ, were you reading or not? Right?
A little of both.
Okay. A couple of things. Yeah, go ahead, finish up, Pradeep. Then I got 2, 3 quick.
Yeah. So the other observation. Oops. Now I lost my thought. Yeah, please go ahead. Yeah, please go ahead.
Yeah. I do think that if you use terminology like FDA, while you and I think everybody knows that, I'm not sure that's true. I would actually say, according to the US Federal Drug Administration, and then when you said reimbursable, I'd say something like reimbursable by insurance companies. I mean, this is, you may think that everybody's going to get this. By the way, I know we'll need to work, and I'm going to say this to all of you. By the time in your pitch decks, consider how you put together a 3 to 5 year timeline that shows launches beyond your country. So they will have heard all of that, but this pitch is really meant to get you ready as physical meetings become available, right? All of that piece of it. I like the story that makes it very personal, and that's a good item for everybody. How do you, I think Srividya said it earlier, start with a story, right? 2 years ago, we had a team that won the global competition, and they actually used, I mean, they showed us a picture. I don't think it was a real Melissa, but they just said, you know, this is Melissa and her 9-year-old daughter. And then they very quickly, in about 12 seconds, said, you know, they've been having speech pathology problems with the daughter, and we're here to help save that situation. Talk about the heartstrings immediately, right? Because believe it or not, they'd shown people in speech pathology still use tongue depressors instead of hardware software, and they were coming up with a hardware software solution that would reduce the learning time for the Melissas of the world. I mean, just give that thought for all of you as to how do you grab beginning and end, not either or, right?
Right, cool. Yeah, you were not there yesterday, TJ. So one of the quotes that I quoted was Mother Teresa, who says, "Show me the mass and I can't do anything, but show me the single one, or show me the one, and I probably can move." Right. So here, I think Melissa was the case where, so people saw one single Melissa, they had a structure, they had a face, they could put something to that that abstract term. 154 million is a huge number, but I'm not able to comprehend it in my mind. I've never seen 154 million people ever, right? None of us can do. The second thing I wanted to ask you is, most of your context is, if I were to use the English grammar word, present continuous, right? So is 154 million a yearly number, or 154 million is like a constantly growing number year upon year? Again, that's something that that's something that maybe you need to see how you phrase it, kind of. Right?
Great. Yeah, these are great things to think about.
Cool.
Thank
Thank
you
you
for
so
the
much.
comments.
Perfect. Vaibhav, you would like to go?
Don't end up going to 1 minute and 35 seconds with all our.
Yeah. Or rather, Vaibhav is saying that, okay, TJ took 35, I will borrow the 25 from him. Cool. Vaibhav, your time starts now.
Okay. Hi, I'm Babu Koza, one of the co-founders at QuickFind. Currently, the electronic repair market is highly disorganized and opaque, and as such, the quality suffers. So much so that most of the devices are discarded after damage. We at QuickFind provide an doorstep gadget repair service with warranty to alleviate this problem. You focusing on hardware reusable technology to make a dent in an estimated 50 million tons of e-waste produced globally each year. So if you have ever faced a problem trying to find a quality, affordable repair service, or are interested in our journey on reducing e-waste, let's discuss.
Cool. So thank you, Vaibhav. You took 45 seconds, right? But Vaibhav, I was kind of struggling to understand which problem are you trying to solve. Are you trying to solve the problem that there's too much of electronic gadgets going to e-waste? Or are you trying to solve the problem that Pradeep has, that sitting at home, he's not able to get his gadgets serviced or repaired? So that's one thing that we may need to rephrase and get some more clarity on that. Right, and again, you said 50 million tons of e-waste produced globally, right? So are you proposing that you are going to be doing doorstep delivery globally? Because then that we are right. So but it has to fit into your long-term goal. You can't just give a number like this, and then when the other person asks you to show data, then you say that no, right now I'm going to focus only on Kolkata, but later on I'll go globally. So maybe you can talk about it as a global problem. But right now, your company is not solving that global problem. You're solving more of a local problem. So what's the actual impact? Then you can kind of work on that and bring it to the global level. That's one thing I would probably suggest from this thing. Second suggestion from my again to all of you who are here. In India, we like to use the word younger brother and sister, right? All of you are like younger brothers and sisters. So sometimes I may point out some things that are very narrow and maybe are like a teacher chiding you, but I want you to take it in the positive sense because I really want all of you to win. So, Vaibhav, I saw the transliteration that my team had done from what you had spoken. There are a lot of places where they have used other words than what you actually use now. So maybe you need to start working on getting those right words so people, all of them clearly understand what you're trying to communicate, right? So we will work on that over the next 30 days. I'm here, Shividya is here, Dr. Lopez is here. The objective for all of us is that all of you win, right? Competition is secondary. All of you should get companies that you should move on, right? Good. So I think we are down to the last. Fahim Ahmed, are you? Fahim is from Coimbatore, yeah. Jeremy, you would like to go now?
Yeah.
Cool. Okay. 1 second. Let me pull. Right. Power Park, right?
Yeah, Power Park.
Super.
Usually it's true that the speech. So okay.
That's okay. So the thing is, tomorrow if you meet an investor, you can't say that my friends too will come. Wait, let's not get into the elevator. Go ahead. Your time starts now.
Okay. So an important fact is to know that it takes 3 to 30 seconds to break an industrial lock, and that the battery life of your e-scooter, in average, does not last long enough to take you back home. So with Power Park, we managed to develop a new station that will work with all e-scooter with all voltage. And I'm so sorry, I'm so bad at this.
Okay, you wanted to pull it up on the screen and you would like to read it out? No, I think reading out is also an option, right? Go ahead. Yeah, cool.
Yeah. I read this speech.
Yeah, please go ahead for now. But in a week's time, I want you to be super confident that you do it without reading, right?
Yeah.
The time starts now.
Hi, I'm Jeremy, City of Our Park. We want to see the pollution reduced in the city, and we aim to do it by supporting the electric scooter industry, an industry we believe in. I was shocked to find out that it takes 3 to 30 minutes to steal the scooter, to break its lock, and also that the average commute to the city is 19 kilometers. But the battery only lasts 15 kilometers. So we built a physical station where you can charge, park, and lock an electric scooter. The industry is going to be worth 43 billion by the year 2030. And we built a working prototype ready for pilots. We've secured our freedom to operate, looking at an IP protected we can get. So if you're going to get a school, a police station, any corporate space, a parking lot, or a university, let's chat.
Cool. Thank you. So my observations, maybe not only from the 1 minute elevator pitch, Jeremy, is one of the things that you're talking about stealing, and then you're talking about charging. They're two different things. And if I were a stealer, I am so glad because, or rather, I am the scooter owner. I know that the person who's stealing the bike can't go more than 15 kilometers. So yeah, now I have to only search in a radius of 15 kilometers, right? So that's the context I got when I read this, right? So it's more good that your bike will get stolen, but don't worry, you will find it in a 15-kilometer radius. So maybe you need to really work harder on the value proposition. Because one, you're talking about stealing, second, you're talking about fast charging, and then you jump to public spaces and all those things. Somehow they're not connecting together, is what I felt. So maybe as a team, you need to find that. The second input I would like to give you also is from the fact that I've been lucky enough to see most of the chapter pitch presentations, and almost every chapter without fail there have been at least one. In today, in my chapter in Coimbatore, there were 3 companies who were working with electric bikes and electric batteries and charging stuff, right? So there are a lot of people doing that. So the immediate question would be, what is it that you're bringing new to the table? So look at it, think over it, and then see what you can do on that. Yeah. Vidya?
Jeremy, I think you started very well. I was surprised that you stopped midway. I think your nerves got the better of you. But for somebody like me who was listening to you, I didn't feel that your communication was not on point. So I think you have decided that your communication is not good. So that's something you need to work on, because you were able to put your point across in a very charming, effective way. So please continue with that. And with a bit of practice, I know that you will be able to speak as convincingly as Stuart did in his video. I do agree with Pradeep. I didn't understand the context of the lock, and it really amused me to see what Pradeep had to say about that. That timing works if you were to say, it takes so long to break a lock, but it takes just so much time to charge the battery. So then you're not comparing apples and oranges, right? It's a level playing field there. So that might be something to work on. But more importantly, just because I've come in here as a language expert, I think you should just continue to practice what you want to say. And if you've got your content in front of you, I don't think you should have any problem putting your point across next time. Yeah.
Thank you so much. Thank you.
Dr. Lopez?
Somehow I'll
You're frozen. Looks like there are heavy thunderstorms along with snow in Atlanta. Dr. Lopez, I think we've lost you on the call. Okay, so Dr. Lopez, we lost you midway. We didn't hear anything that you spoke. Yeah.
I think it's my internet is unstable. Are you hearing me any better now?
Now better, yeah.
So all I'm going to say is, Jeremy, will you get to university@tie.org, the video you guys created? I think it tells a much better story in a lot shorter time than all the words you and Stuart have put together.
Right.
You know which one I'm talking about?
We have a couple, like the one when we show the station in action, or the one when we do the presentation in a slow, when we present the station, or when we present the action, like there is a lady that's actually clipped the station.
You know what? Send both out later, and I don't remember which one I saw. I've seen probably several dozen from all of you, but I thought the video quickly told me what the value proposition was. And I think you're ending with too broad a statement. If you're going to a university, you're going to an office building, you're going anywhere kind of deal. I'm not a scooter rider, but I know what you all want. You all want to talk to office building owners, right? Where people are and they would give you a space in their parking area, or university campus owners where they'd give you a spot. I think you need to be focused to say that's your market and that's what y'all are going to do for the next year or two. I think if you start to open it up, it's a little too broad. So, but send over the videos, and I think you'll get some. Well, the more specific you are, and by the way, I'm a Thomas in terms of the 19-mile commute. I think you either need to tell us where that information is coming from, if it's just one country, if it is, all of Europe or whatever. But 19-mile commutes on e-scooters, to me, it's not a believable number.
Yeah. He used the word 19 kilometers. And Jeremy, in fact, my electric bike gives me like 45 kilometers on one charge. So that's something that you may need to really
What
look
I'm
at.
saying is that is it the commute for everybody, or the commute that an e-scooter user would do? Right?
That's the average scooter. That's the average time, like distance that someone uses in Tel Aviv. It's 19 kilometers usually.
For
but
an
you also
e-scooter user, or a commuter, whether they're riding a bike, a car, a train, a bus, or a scooter.
E-scooter. Or e-scooter.
Wow. So then I think you ought to speak to that. I'll bet if you did some research, it's probably not transferable to many countries.
Yeah, Tel Aviv is.
I think mostly because you folks are very disciplined, and whenever I have been in Israel, you folks have much better traffic than in other countries. It would not be true in Rome. It would not be true in New Delhi. It would not be true in Mumbai.
Right. Cool. Yeah, I think the other.
Oh,
Yes,
this is Samantha. I don't know if this is a good or bad recommendation, but because I didn't grow up with kilometers, I got stuck because I was like, well, what's that in miles? And if you said the judges are 50%, I don't want to mess up your flow. And maybe the judges know, and that's why I'm only caveating this. But I was like, is that far or is it close? And then I started doing math, and then I kind of lost you. I also thought your presentation was really done. You have a really nice presence, so that was really great. I liked your body language. But I don't know what your advice would be on the kilometers miles thing, but it was something that.
Well, it's 12 miles, by the way.
The two of them.
A long ways, right? I don't know in Portland if you'd be riding an e-scooter. That's why I said it's a good number, but it happens to be for a market in Israel, which is their initial market. I believe they're going to Europe after. Right?
But Jimmy, are you sure about the 15 kilometers per charge? Because that looks like very, very low.
That's the number we find on the standards. The most used e-scooter is the Xiaomi MS 365. So we based our market research on this one. But it's true that we've seen in the couple last months and years that there is bigger scooter with a biggest charge, and that's why I said that the station is universal, meaning that you can have a little scooter working on a 42-volt charge, or a bigger one working on a 60-volt charge, and the station will work the same. So that's why we're trying to evolve with the increase of the battery life.
So from again that perspective, there's too much of action on the e-scooter and the e-bike domain. So kind of everyone's now become an expert in it. So there may be more questions coming up. Like 10 years earlier, this was like a very innovative thing. People were excited, but now it's like, okay, what do you bring on the table, right? But maybe you have something. Please work on it. Let's look at the video and see if we can work on that as well. I can see Ankit, you would like to go? Okay, Ankit is not here. Cool. Would Samir or sorry, Puran, are you here? Puran
Yeah.
is not here.
Yes,
You're here?
Yeah, I'm
Yes.
here.
Would you like to do your 1 minute pitch?
Yeah, surely.
Good.
Just a Yes, sir. Yeah, we can start.
Yep. Your time starts now.
Hi everyone, I'm Puran from EA Polymer. As per the statistics released by the Food and Agriculture Organization in 2016, in the last 2 decades, farmers worldwide losing around 30 to 40% of agriculture yield due to the water shortage. We at EA Polymer come up with a kind of organic hydrogel product that can help farmers to get 10 to 30% more agriculture yield with the less water. This technology have a huge market of 9.7 billion USD in India only, and we will be targeting 10% of it in the next few years. We had patented our technology in India and had already sold more than 2,000 kilograms in the last few months. We also raised nearly 250,000 US dollar in our seed round investment just a month ago, and now focusing on scaling up our technology to few drought affected states in India.
Perfect. I think timing wise as well, perfect. And kind of in terms of the story and the context, you took the global thing and then you said that we are going to focus only on the India thing and kind of the first 10% of the Indian thing. I think kind of fits in the whole thing. Maybe one of the aspects that you can do is also to see how to bring in the context of the drought into the minds of people, right? What is the impact that a drought has? Again, maybe states, countries, and cities which are water surplus would not really understand the impact of that. So that's something that maybe you need to look at, Puran. One is that. Second also is the fact that world over groundwater levels are now depleting. So is what you're doing helping that in some way as well? Maybe not on the elevator pitch, but probably on your pitch deck. Probably you could also focus on the UN's initiatives on trying to save water and conserve water, rather, right? So, but overall, I think I like the story. Maybe we need to just work on the delivery a little bit, and then we should be there. Cool. Would Ajay or Samir want to do their pitch once more?
So before that, can I ask one thing?
Yes, please.
At the end, we in the when you said the template, there was a call to action button, but I could not figure out for us what should be the call to action for us, because if
Perfect.
one mentioned that just a month ago we have raised around like 250,000 US dollar in seed round, then what should be the next call to action button for us, like?
Right. So that's a good question. In fact, I wanted to bounce this thought off the Dr. With Dr. Lopez also, and like TJ in his last line, he said, "Come talk to us." That kind of looked very transactional. It's like I'm talking to you because I want to derive some benefit out of you, kind. So maybe from one perspective, like there's no right answer. From one perspective, the call to action can be saying that we are looking for people who could support us. Would you be kind enough to share details with us of people who could relate to, right? Rather than saying that, come talk to me, assuming that that person is going. I'm again not looking at it from the competition perspective. I'm looking at it from a very generalized perspective. You're meeting a guy who looks like an investor on an elevator and you're talking to him. So I don't think any of us would go and tell him, come talk to us or come talk to me, right? So this is what I'm doing and this is where I'm struggling. Do you think you can help me out? Or something on those lines would kind of make it real life, because like I told you yesterday, it's a very personal statement. Somehow these templates don't always work. They kind of put you on a track which is not the real you. The real you is like trying to just share a story with the other person, and if he really loves the story, he will say, okay, I want to talk to you. I think that's the better opinion, where they want to come and talk to you, then you are on the upper ground. Dr. Lopez, what do you have think on that?
I think it tells a good story that you've got traction in terms of your financials. Somebody believed enough in you to collectively put together $250,000. I'd leave them with the story of, we're looking forward now to scaling. And in that regard, we're looking for strategic partners. See, partners is a very broad term that could mean go to market. It could mean expanding pilots, beta, whatever it is. I think that is more of a call to action, that you've now got the initial financial, by the way, as you heard from JP, you should always be either getting people interested in helping you. I think the partnership is likely the forum to perhaps make the call to action.
Right. And the other thing also is that somehow we are okay because it's a competition, so we are sticking to that. But I think we are narrowing down the focus of the elevator pitch to only an investment thing. All said and done, it could be a elevator sales pitch as well. Like you're getting into the elevator with the chairman of a fertilizer company or whatever, right? So.
But in this competition, I always tell people, in fact, somebody who told us that they'd completed 100% of the round, I got them to think about that. That's great because it says a lot of other people have done due diligence. And so they went back based on us saying, will you let us also add to the investment? And their board authorized 120, going to 120% of the investment round at the same terms, right? So there's always room for that. And it sounds like you may or may not need money, but I always say it never hurts to find help from people. You'll be surprised. It may not just be checks, but people can help in a lot of ways. So.
Right.
Okay. Yeah. Thank you.
So, thank you so much, Puran. Samir or Ajay, you would like to go with your pitch? I think you're the last ones left now. So.
Yes, I would like to go.
Please go ahead. Okay. Your time starts now.
Okay. So I am Ajay from Nav Kaushal, and the context is that about 50%, more than 50% of the population lives in rural area, and specifically there hasn't been any single innovation coming up from there. So we are here, Team Nav Kaushal, with a vision to develop grassroots entrepreneurs by educating rural school children from experiential learning by project-based application. And this would be done by introducing innovation lab into such tribal rural areas, wherein the student can design, prototype their own ideas and be a change to their own problems. Hence, we come up here by introducing innovation labs across these areas, and also we would like to go global in similar countries facing such challenges. So here, we would like you to come up and join with us for this change. Thank you.
Cool. So 1 minute and 7 seconds, maybe you'll need to work on that timing part. But again, one of the other things that I observe now, Ajay, is also, I think it's a very strong statement that you're saying that nothing came up from the rural India, no innovation came up, right? Some of the best water table conservation projects have come from Kutch, right? The desert-like region in Gujarat. And they are all amazing innovations where a gentleman has just taken a couple of pipes and then he's built a water conservation project, which even scientists in big institutions were not able to do. So that's a very strong statement that you're making, and may look unrealistic. What the way I would probably look at is that if rural children are nurtured with the right platforms, we could see a lot more innovations coming. Like, for example, Puran, our friend, is talking, right? EF Polymer is also from a village of 250 people, right? So that's right now you have someone who's telling you that no, innovation does happen so innovation is irrespective of where you belong to. Innovation comes from a dire necessity, and dire necessity is something that's anywhere in the world. So innovation always happens. What does not happen is the nurturing of that innovation so that it can become like a global phenomenon. So what you're trying to do is to nurture that by giving them the tools to empower them or enable them. So look at it from that context. I think it'll kind of do much more better for you guys in the whole context, right? Cool. So got the points, Ajay. Brian, did you think over what we spoke in the start?
Yeah, I'm gonna need more time on that. I think there's some different directions it could take, but the feedback was useful.
Right, super. So you could always mail to TiE University, university at TiE.org, and I will also forward those mails to Srividya. She can also help us with the English part of it, right? So the Britishers must be ruining. It's an Indian now teaching English to the world. So cool. Yes, and probably Samantha as well, if you could work on whatever insights we gave today. But deep down, please understand, we are outsiders, right? You are the one who has lived and breathe is the right word, Vidya, right? So breathe this idea or thought. So don't take everything that we tell you and kind of go anxious. Try to fit it into your thought process and come up with your own style. That's why I said templates are a very dicey thing, because they kind of sometimes put you away from your style. But of course, it's a very strong statement. I'm making a very personal one, so please do look at it that way. Vidya, any closing notes?
Yeah, I just wanted to offer some feedback to Puran. There is one thing that you can talk about, which is there are two ideas. One, of course, is global warming and the fact that we're living in a really changing world. That might help your idea. The second is, when is using less water to do something ever a bad idea? So it needn't just be from the drought perspective, though it really brings home the seriousness and the importance of what you're trying to do, but also the fact that there is a way to actually do exactly what you're doing with great benefits for people, but by using fewer resources, leaving those resources for other people. So that might be another way by which you could frame your call to action. So I wanted to give that feedback.
Super. Done. I've got your text as well, Puran. I'll put it on the document there, and then we will keep working on it. Um, so all the best to everyone. We'll see you next week. But in the meantime, if there's anything that you would like, the email ID and the WhatsApp group as well. So look forward to hearing from all of you. Fahim from Coimbatore, you're the new entrant today. So maybe today I will not call you upon to do the stuff. So like yesterday, the team from Mysuru, Fahim is the fresh off the oven. They just won the Coimbatore leg, and they have a Fahim. Why don't you tell people what is it that you're doing? You're on mute.
Myself, Fahim, Gabriel by Coimbatore Packet.
Yeah. So what is the product or the way you're going to change the world and make it better?
We have made a bio toilet named as Bio Comfort.
Couldn't hear you, Fahim. Yeah. Okay. So what Fahim and his team are doing are they're trying to build bio toilets which can be fitted to existent ready-made buses. Right. Again, a very India-specific problem that most of the buses don't have like an inbuilt toilet. Long-distance buses, and when they stop for breaks, the women generally do not get down because the toilets are not properly accessible or not safe. Right, and I think it's a India specific and a China specific problem. I don't know how many of you have gone to China. It's the same problem in China as well. The toilets are not clean and those kind of things. So what they're trying to do is to change that context by bringing in easy modular toilets that can be fitted on buses, so that more women feel comfortable traveling overnight. Otherwise, women generally avoid bus travel in India, which was a very surprising observation that came out of the jury deliberations today. And that's the feedback the jury gave, because these guys were actually working on the same product, but in a very different context. So I think that's some of the things that the TiE ecosystem is also doing. It's been a pleasure talking to all of you. Thank you for staying on for so long. Hope we have added some value to you. Stay safe, and see you guys soon. Bye-bye.